Simone, thank you so much. Simone Foxman there. Coming up, permanent hybrid work at UBS. Bloomberg sources say the Swiss lender will let employees mix working from home and the office. We're going to discuss that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Welcome back to Bloomberg Daybreak Europe. I'm Yusuf Gamedin in Dubai with Danny Berger in London. Let's talk about UBS, because the bank will permanently allow most of its employees to adopt a hybrid model of working from home and the office. According to Bloomberg sources, the plans would apply to 2/3 of the Swiss lender's workforce. This hybrid schedule would come as many U.S. banks take a more hardline approach. Joining us now for more is our Asia finance reporter, Nabila Ahmed. So are there any particular sources of inspiration that has pushed UBS in this direction?
Yusuf, that's a great question. Look, this issue of how to get workers to engage and the future of the office is really vexing everyone that you talk to across the business and finance community. This is a really interesting move from UBS CEO Ralph Hamers at a time when workers are demanding flexibility. So perhaps that is his inspiration, because flexibility equals trust, and giving workers that hybrid model shows that an employer is willing to trust them and empower them. And, you know, workers are saying that we've worked from home for more than a year, we got the job done, it was fine, let us do that. And UBS definitely thinks that this will be a way to retain talent and also attract talent, because it is so different from what we're seeing from the Wall Street banks.
Exactly. The tone just, I mean, basically what we hear out of Wall Street is get a vaccine and get into the office, get to your desk. I mean, how is that just the divide between the U.S. and Europe we're seeing? Is that where the comparison breaks down?
Absolutely, Danny. That chasm is definitely widening rapidly, as you say. U.S. banks have been very prescriptive about people coming back into the office, and those like JP Morgan are even pondering whether to mandate vaccination as well. In Europe, you've seen some banks sort of be a little bit more easier than that. So you've seen Societe Generale, which is saying something similar to UBS, and Citigroup actually in the US is the only bank so far, one of the only big ones, that has said that it will be happy for its workers to work a hybrid model for a longer period. And remember that Citi CEO Jane Fraser even gave the employees a day off, which was the Citi Reset Day, just acknowledging that it's been a hard pandemic for people.
Yeah, the no Zoom Friday. Gotta love that move out of Citibank. Nabila, thank you so much. That's our Asia finance reporter, Nabila Ahmed. Eleanor Taylor Joladin is from UBP is still with us. Eleanor, look, these headlines about banks, whether people come back into the office or not, it says a lot about workplace culture, of course. But for you, does this affect the bottom line at all? Does it affect the attractiveness of the banking sector?
Absolutely not. A bank functions on the quality and the talent that it's employed, and it's the strength of its balance sheet as well and the strategic direction that it has. If those elements are all brought together, I don't think it really matters tremendously where that talent is working, as long as it's able to carry out and to seize the opportunities which are there.
European stocks have been on a tear, and I begin to wonder whether that outperformance is going to last, especially since we have a new earnings season upon us. Within that sort of spectrum, are banks going to be able to shine, do you think, this time around?
I think we're in a stock pickers market. I think we should always be in the stock pickers market in any case, because just because you're a bank doesn't mean that you're the same as another bank. So it'll very much depend again on the quality, the strategy of the different quoted banks, as opposed to just saying, oh, we can buy this sector. I think one often sees when one goes through a bit of a rotation or a change of direction in terms of economic strength, that people first think, there's a sector which is interesting, or a type of company which is interesting. And there may be some people who are less careful and less informed as to how to invest that may just go into a given sector. I think the time has come now with a little bit of maturity into this reopening, into this how to live with the pandemic situation, where people would be well advised to look at what is different between different companies within a given sector. And there'll be some winners and some losers.
Well, one thing that might be the same across a lot of companies are just earnings expectations. The Citigroup Global Revision Index for earnings has seen a spectacular stretch of analysts continuing to see higher earnings. Is it possible, though, Eleanor, that we could be heading towards peak earnings?
I don't think we're at peak earnings yet. No, there may be some expectations which are disappointed, but I'd rather say that in the current environment where we seem to have a strong fiscal support, which wishes to be in place from governments, where we continue to have a relatively easy monetary situation, and where we are still in a reopening phase and a return to the economy. Remember, when we see strong results, we're often not yet at 2019 levels of performance from companies. So we've still got some way of improvement to go post-pandemic. And I would say that that was going to support earnings going forward. So I think we've still got quite a bit of travel to do on the earnings side. As regards the multiple that you pay for those earnings, that might be a little bit on the higher side currently.
Eleanor, Brent crude is trading at about $75, $76 a barrel. If the rally continues, if OPEC Plus later this week decides not to do anything, and prices go up to 80, 85, at what point does it become a problem for the European economy and for the recovery?
Certainly one of the concerns that a lot of investors have at the moment is raw materials in general, not just oil, and to what extent those higher prices would become a problem. We're seeing some of the commodity prices already correcting downwards. And remember that this recovery is being steered in part by governments and supra-government organizations. We've seen as infrastructure plans and so on. And those are trying to steer the economy to be a slightly more environmental, sustainably friendly economy. So there may be some losers who are very, very heavily dependent on heavy raw materials. But some of the success stories that we might see emerging are the ones which can offer alternatives to the more traditional and polluting raw materials. And so again, you think what you're investing in and think what the future is, rather than just think this is a bog standard recovery.
Right. Well, related to that point, when you see oil continue to be resilient, oil equity, oil stocks, oil companies, they really haven't looked as strong. Does that environmental concern account for the difference, or is there something else that's making energy stocks less attractive to the market right now?
I think it's the long-term vision. Certainly, perhaps the market was taken by surprise to see the shareholder behavior for Shell a couple of weeks ago, where there was a clear indication that they were going to have to do more in terms of renewable energies. And we're also seeing regulation from governments becoming much stricter in terms of carbon emissions. And that means that if oil, as is usual in a recovery period, is coming up from very depressed levels, let's be honest, there's perhaps a question mark as to how long that can last. And I think that's probably also the structure of the companies which are producing oil and how they are going to have to adapt, how they're going to have to reinvest in order to be part of this extremely encouraging sustainability revolution which is happening at the moment.
Eleanor, thank you very much for sharing some of those insights. It's Eleanor Taylor-Dulaiden, UBP, co-head Swiss and Global Equity. In fact, it turns out that we've got quite a bit more coming up. The parties of Marine Le Pen and Emmanuel Macron are hit by poor results in France's regional elections, leaving the outcome of next year's presidential race increasingly uncertain. We'll have the full story next. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome to Bloomberg Daybreak Europe. I'm Danny Berger in London. Alongside me is Yusuf Gamal-Aldin in Dubai. And Eleanor Taylor-Dulaiden from UBP is still with us as well. Eleanor, we do seem to have a lot of geopolitical events on the horizon, be it a French regional election, also tensions between the U.S. and Iran over the weekend, but still stocks unmoved. What do you think accounts for that lack of reaction, at least for now?
Well, Iran and the US tensions is not exactly new, and we're used to these flare-ups of tensions, unfortunately, up until now, as to the sensible diplomatic ways of being able to diffuse those. As regards some of the European political scenario, I think the big one that everybody's waiting for is the German elections. Obviously, with proportional representation being the approach for German politics, it doesn't mean that you had these sort of lurching swings that you would have in something like the US or the UK in terms of a change of power, but a more subtle evolution, which is probably easier to handle. And perhaps for me, the biggest concern on the geopolitical side is when you look at the French regional elections, it's the abstention, which means that there's very little faith from electorates in their governments at the moment. And that obviously, you do actually need people to vote for a democracy to function.
Sure.
So that is problematical, but it's a slow problem as opposed to a market relevant problem.
Eleanor, we're going to have to leave it there. A bit pressed for time. Eleanor Taylor-Gelaiden from UBP, co-head Swiss and Global Equity there. Of course, we are going to be looking at the Hong Kong reopening after its storm warning, holding an afternoon session. That's going to happen momentarily. It is expected to be quite a volatile resumption, more just around the corner. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning from Bloomberg's Middle Eastern headquarters in Dubai. I'm Yusuf Gameneddin with Danny Berger in London. This is Bloomberg Daybreak Europe, and these are today's top stories. Variant concerns continue to mount from California to Sydney. South Africa raises its alert level. Stocks, little change. Treasuries hold losses. The UK joins the crypto crackdown. Regulators ban an affiliate of Binance, giving it until Wednesday to comply. Bitcoin trades higher. Plus, another twist in the return to the office. UBS is the latest to split with Wall Street. 2/3 of the staff set to mix working at home and in the office, and that is permanently. Welcome to the program. Let's get straight to what is happening in Hong Kong, Danny, because we are keeping a close eye on a resumption of trading on the Hong Kong Stock Exchange. And basically what we have here is an initial disruption from a rainstorm earlier on that prompted the cancellation of the morning session. The warning had been lowered for the rainstorm to amber after a black warning at 11 a.m. local time. So stock trading resuming just moments ago. Currently we're called higher, 0.1% at the moment. A fairly calm open, but let's wait another minute or so and see how that evolves from here, Danny.
Yeah, it's definitely tough to have this delayed opening after the weekend because there's a lot to be pricing in. So already you're dealing with playing catch up, but now you not only have to play catch up from the weekend, but the morning session as well. And I mean, this rainstorm, the warning was so severe that vaccines were suspended as well, Yusuf. So that's where you get that kind of volatility, right?
Yeah, so basically what really caught my eye is this Delta variant and the new warnings that are coming from South Africa. I mean, they're closing schools, they're banning alcohol.
Right.
I mean, this is not just a small little restriction. This is really going the extra mile, which is a warning flag for the rest of the world.
Right, and you pointed out before, Mohammed El-Arian, saying that, look, this hasn't seeped into the data yet. Our guest the past half hour saying that it's not factoring into her view. So let's go ahead and look at where equities are doing this morning, because that is certainly reflected in the prices we're seeing. We are seeing just fractional weakness in European futures. I don't even know if I can call that weakness if we're just down 1 basis point when it comes to stocks 50. But you know, Yusuf will say it anyway. We're a little bit red there. Yeah, and then we have also a higher session. Again, not a ton of reaction. We are seeing a bit of yield curve steepening. When you look at the 30-year, the rest of the curve is flat. And ahead of OPEC Plus, you have $76 a barrel on crude, Yusuf. Again, maybe we're just going to sit and wait until we head to that risk event and see what comes out of OPEC Plus.
Remarkably sanguine, some of these asset class metrics and equities in particular for futures. But let's talk about investors who are starting the week balancing the opening or reopening of economies around the world against increasing cases of this Delta virus variant that we've been talking about. Joining us now is Ludovic Subran, Allianz chief economist. We've been getting mixed signals from the people we've been talking to, Ludovic, so it's important to us to get your initial analysis on where this anxiety around the Delta variant and what governments do to mitigate it could go.
Well, yeah, it's quite complicated, right? In the Foreign Affairs article, people call about the forever virus. So the Delta variant is one more variant. We're of course concerned, we know that the UK grand reopening delayed is costing billions every week, billions of pounds every week, right? The tune of £3 billion every week. We looked, of course, at the full, lockdown of Sydney. In my country, France, the Delta variant represents now 10% of the new infection. So we know that the Delta variant is there, and so the base case scenario that this wave comes on top of a highly vaccinated population. Even though we don't reach herd immunity, we will have a stock of vaccinated people that will be slightly higher. So we hope that the stop and go can be avoided in most situations. But yeah, it is something that we're going to have to live with for quite some time. So we have this couple of great quarters ahead of us. In the US and Europe, but with the caveat that the Delta variant could create a bit more volatility. And I think this is what investors are trying to price in the way they can, understanding a little bit the severity of this new wavelet, knowing that we have vaccination and we certainly have ways to respect some kind of social distancing without having to pause the economy again.
Right, so if we have great quarters ahead in the U.S., and this, of course, is a risk simmering in the background, is it possible by starting this discussion of tightening policy, even though we're just sort of on the threshold here, that the Fed could be heading towards a hawkish policy mistake, again, if these risks are very still present?
Well, this is the risk that we all have, on our radar, right? The Fed crunching the recovery, a crisis coming from a tightening of the U.S. financial cycle. But clearly the commitment by the Fed and its board is to stay in and to continue to see transitory inflation pressures are not good enough a reason to tighten. So, we're still, in the camp of people that think that inflation is transient. And we're still in the side of people that think, maybe 2022 will be the beginning of something. We believe in an operation twist ourselves. We don't think that the Fed will stop accommodating monetary policies the same way it did in 2013 and all the way to 2015. But yeah, the risk is there. It's the major visible risk. I'm much more worried about endogenous instabilities on the financial market. I'm just more worried about frauds and overstretched assets. This is the unknown, right? The white elephant or the visible, the gray rhino. Yeah, this one is one.
I mean, I'd like to leverage sort of your economic expertise here, because we had Eric Rosengren who basically said, you know what, this whole hype over inflation is overdone. It's going to be transient. He's going to be a voting member of the FOMC in 2022. You talk about it being transient as well. What does transient mean? How does that exactly look like?
It means you don't have two things happening. The first one is monetary inflation. So clearly the injection of liquidity by central banks creating undue inflation. We don't see that happening because the velocity of money is very low. This is mostly because the money gets stuck in Europe on banks and in the US on markets and doesn't really go back and forth into the real economy. And this is where we need to be a bit humble and to continue to take the pulse. We don't see yet a wage price loop, right? So we see wages and people being in demand in some sectors that are reopening very fast, like hospitality, but we don't see wage growth as a pervasive, component of this recovery. Actually, wage bargaining and wage moderation will be part of this recovery because people will be concerned about their jobs. And to some extent, you have several, structural issues on the labor market. One of them is hybrid workplace that would continue to, I think, push down wages. So as long as monetary inflation and wage growth doesn't happen, this is transient. I'm sorry, it's a weak definition because it's looking back, looking in the rear mirror, but this is the best we have right now to continue to be put or to invest in this market without believing there is a structural regime switch in inflation.
Right, and as you say, there are some of these wage effects. We have Disney, for example, over the weekend giving an $1,000 bonus to its hospitality staff, for example, trying to lure people in. Having more money in people's pockets and for example, the very high levels of household savings, does this not mean that there's more purchasing power among consumers and thus we get something that's a little bit more than transient?
That's fascinating. We had one of the worst recessions since World War II, and purchasing power is on the rise, right? So that means that the aggregate compensation by governments of the lost output is actually very good, very strong. So I see that as a good news, right? And so indeed, the question will be whether raises in wages and purchasing power is gonna be good enough so that people don't feel that life has gone a bit pricier, right? So that's this old balance. In Europe, for example, the elections ahead of us, your former guest talked about this, purchasing power is going to be at the center of everything, right? Because you want to make sure that people don't have the impression that inflation is eating up their purchasing power, that their wages actually catch up, right? So I don't think it's bad that people have a bit more money in their pocket. The question is, and the propensity to consume is actually low, right? So if you look at the US checks, the Fed of New York tells us only 30 to 35% is spent. The rest is saved. So I'm actually more concerned about precautionary savings. I'm more concerned about people being uncertain about the virus flaring up and they're saving money instead of looking at an investment cycle. So I would like to see even more spending.
Everybody could use a bit more money in their pockets. Nobody's going to complain about that. I'm a bit surprised though. Over the weekend, what got completely lost is this infrastructure bill. Just short of $600 billion, and it's a fraction of some of the trillion-dollar figures that were bouncing around earlier. How important is it that there is a follow-up, that there is successful implementation? Because this is the fiscal side of the equation. This is where the U.S. needs to live up to it.
I've always been very cautious about infrastructure plan because it's very good and very easy to pledge, but disbursing is very hard. I used in a previous life, I worked at the World Bank. We did a lot of infrastructure projects. And, you can announce a massive, bill and, 2 trillion or whatnot in Europe, 750 billion, the numbers look good. But then the problem is, what do you spend it on? Because if you have 2 years or 5 years in the case of the US to spend it, I don't think you're going to do good, green, inclusive infrastructure. I just think you're going to do roads that leads to nowhere, museums, and bridges that are not really needed to create a boom in the economy. So this is where we actually need to look for policy mistakes also, is how fast do we want to disperse the money and how effective are these infrastructure to boost growth, right? What are the multiplier effects? So I think it's great news. I think infrastructure and building back better is the key, the crux to actually making it past this virus. But I will look really in the details of where this money is spent, how it is spent, what type of leverage do we get from the private sector? Because, in the past, there's been a lot of, I would say disappointment from these big infrastructure announcements because, when you have to do it, you realize that it takes a bit more time to make it in a good way, or at least in a highly growth incentive way, yeah.
Yeah, and perhaps that's why we're seeing a bond market that's just so unreactive to what's going on in this space. Ludovic, I'm sorry, I'm afraid that's all we have time for this morning. Thank you so much for joining us. That's Ludovic Sabram, Allianz Chief Economist. Now let's get to the first word news with Simone Foxman. Good morning, Simone.
Good morning, Danny. Australia has extended virus restrictions as it fights its latest wave of infections. Greater Sydney's 5 million people were put into lockdown on Saturday, while the Northern Territory, Queensland, and Western Australia have also imposed new curbs. South Africa, meanwhile, has banned alcohol, outlawed public gatherings, and closed schools. It's to move to alert level 4, its second highest as it battles the spread of the Delta variant. United Airlines is poised to buy more than 200 Airbus and Boeing jetliners in one of the largest deals in its history. Sources say the U.S. carrier is looking to revamp its single-aisle fleet with more efficient planes. United is expected to purchase more than 150 Boeing 737 MAX jets and over 50 Airbus A321neos. We're told the deal is set to be announced during investor events on Tuesday. China's Envision Group will spend as much as $2.4 billion on a battery plant in northern France to power Renault electric vehicles. Carmaker will also acquire a stake in about 20% in French startup Vercor, which makes power packs for larger and premium models. Renault says the factory will help towards its target of producing 1 million electric vehicles in Europe by 2030. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny Youssef, electric vehicles and more efficient planes driving headlines.
Yeah, absolutely. Although I do miss the sound of the larger engines, and you know, there's just something to a V8 and a V12 that can't be replicated in the EV. But Simone, thank you for that, Simone Foxman in Doha. I want to also check in on the markets in Hong Kong because we are back online. What happened with the morning session? Well, it got literally washed out because of a severe rainstorm. At the moment, we are just a little bit to the downside here by a whisker or two on the Hang Seng Index. But the broader Chinese market story here is quite fascinating because the tech-heavy Chinex Index rising as much as 2.2%, set to close at the highest level since June of 2015. It's remarkable how certain parts of this index have been able to outperform by comparison. So let's get you a bit of a snapshot as well of what is coming up on the program. Bloomberg speaks to the last and only foreign scientist to work inside the Wuhan Institute of Virology lab. As the lab leak theory gains ground in public discourse, the virologist Danielle Anderson paints a different picture. Today's big take is next. This is Bloomberg.
markets never sleep, so stay connected with Francine Lacroix in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London with Yusuf Kamaluddin in Dubai. Now let's turn to COVID and the outbreak and the lab where virologist Danielle Anderson is the last and only foreign scientist to work in what has become the world's most notorious laboratory, which of course is the Wuhan Institute of Virology, BSL-4 lab. Now, an expert in bat-borne diseases, Danielle's most recent stint there ended in November 2019. The emergence of the coronavirus in the same exact city where Institute scientists study that same family of viruses has started to stoke speculation that it might have leaked from the lab. But Danielle paints a very different picture.
And there was no chatter of anything. Scientists are gossipy and excited. So yeah, nothing strange from my point of view going on at that point that would make you think, oh, something's going on here.
Let's get more with Bloomberg's Rachel Chang. Rachel, now that we've heard from Danielle, this scientist at the laboratory, are we any more closer to figuring out the origins of COVID?
Hi, I mean, to be honest, no, we're not. I mean, there is no smoking gun evidence for either side. I mean, Danielle she does say that she believes it's more likely a natural origin of the virus, which means that it jumped from an animal. At the same time, she's not naive to write off the possibility that there was obviously, something going on that she may not have been privy to when she was there. But what's been so valuable about her account and her coming out with her story is, just painting that picture of the fact that this is very much a normal lab. The protocols and the restrictions that were taken by the scientists, the work that was being done. She was there, she had meals, and she hung out with some of these fellow scientists. It wasn't the kind of sort of dark gathering or organization that unfortunately is now being painted in some places.
What kind of color did we get in terms of how the lab was run, some of the day-to-day operations, whether or not she would have been able to see any infections?
Right. I mean, she was close to her colleagues, and one of the things that's been said is that some of these researchers got ill, but the names of who these people were have not been disclosed. And what she's saying is that she wasn't aware of anybody being sick. She herself, although they worked in very close quarters, they shared the same shuttle bus to work every day. She was never sick. When she left China, she was tested for the virus. She didn't have any antibodies, which means she's never had it before. She also talked a lot about how the lab actually had very high security protocol, right? The researchers had to undergo 45 hours of training to be able to work independently. They did have some of their own unique systems for designing disinfectants to make sure the lab was clean and there would be no outside infection. These are things that have now been adopted by her in her own lab after she's left Wuhan. And another valuable thing that she has contributed is, she's a researcher herself working on the virus and other viruses. And she's saying that the truth is the sort of gain of function type of work, which some people have said was maybe how the coronavirus was created. It's simply not that easy actually to do, even if you have the intention. Very few researchers have successfully been able to manipulate viruses in that way. So that's something else that she's saying about what happened.
Rachel, I wish I had your gig getting into the details of these investigations. Bloomberg's Rachel Chang there. And if you want to read today's Big Take in full, just type NI Big Take Go on your terminal. Let's change gears a bit and talk about the outcome of next year's French presidential election, because it looks increasingly uncertain after the incumbent Emmanuel Macron and the far-right leader Marine Le Pen, who leads the national polls, registered dismal showings in Sunday's second-round regional ballot. Bloomberg's Caroline Conan joins us now for more. Just to give us a bit of perspective then on the results and how that sets us up then for next year's election.
The political earthquake here in Provence did not happen. The far right wing of Marine Le Pen did not manage to win the region, and Pen break the glass ceiling. Marine Le Pen actually wanted to make Provence, this region where you have on one side the glitz of the French Riviera and on the other side the poor suburbs around Avignon here and housing estates in Marseille. She wanted to make this a laboratory for her program for 2022 on immigration and security. She failed. It's also a failure of President Emmanuel Macron, who did not win any of the 13 regions in mainland France. Instead, the old two-party system is back, with the mainstream right winning 6 regions, including the north of France, where you have Xavier Bertrand, who was re-elected. He has become a real rival to Emmanuel Macron and Marine Le Pen for next year's presidential elections. And even though these regional elections are not necessarily a bellwether for next year, clearly this lowers the chances of Emmanuel Macron and Marine Le Pen to get some local roots, some local support for their campaigns. So who knows, this might change actually the campaign between now and April 2022.
Caroline, thanks for staying on top of this story for us and for giving us those beautiful views behind you in Provence. That's Bloomberg's Caroline Conan. Now, coming up, the UK's financial watchdog bans Binance markets amid a global crackdown on the crypto industry. Of course, we've heard from China as well in that crackdown. We're going to have more on that next. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Welcome back to Bloomberg Daybreak Europe. I'm Yusuf Gameldine in Dubai with Danny Berger in London. That is quite the lineup, but what's also an interesting development is what's happening with Binance, because the affiliate Binance Markets Limited has been banned from doing any regulated business in the UK by the country's financial watchdog. For more on this, we're now joined by Bloomberg's cross-asset markets editor, Joanna Ossinger. Joanna, I mean, what's going on exactly then with these restrictions? There's been a bit of confusion as well around whether or not it is directly related to sort of the Binance HQ.
Right. Well, Binance has these arrangements where it's a big global crypto exchange, but then it'll have an affiliate, like the U.S. affiliate or the U.K. affiliate. And so this is an affiliated company. It's not directly Binance, but it's, Binance bought this company. But the UK did say that it needs to put warnings on Binance.com, which is the bigger company. So it is at least alluding to the broader company as well.
Yeah, it's definitely interesting to see, despite the fact that they have this ban, Joanna, that we are still seeing Bitcoin move higher. I'm afraid that's all we have time for. Joanna Ossinger, Bloomberg's cross-asset market editor, thanks so much for joining us. Yusuf, that's going to be it for us on this Monday. Keep your eye on Hong Kong, on Bitcoin. And up next, we're going to have the European market open. Anna and Mark walk us through that.
Excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more, they might just need just some practical experience in an Australian kitchen.
I have not from Australian friend, now back in the kitchen I have many friends.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Good morning. Welcome to Bloomberg Markets, the European Open. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins me in Singapore to take us through all of the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Variant concerns continue to mount from California to Sydney. Australian authorities race to contain outbreaks of the Delta strain as South Africa raises its alert level. The UK joins the crypto crackdown. Regulators ban an affiliate of Binance, giving it until Wednesday to comply. Bitcoin, though, trades higher. Plus, another twist in the return to office story. UBS splits from Wall Street as 2/3 of staff will be offered a permanent hybrid working model. Good morning, everybody. Welcome to the European Market Open here on Bloomberg TV. It's just gone 7 o'clock here in London. It is Monday morning already. Let's head to Singapore, though. Mark joins us from Singapore. What are the markets saying to you, Mark? Good morning.
Good morning, Anna. Well, it's a very quiet session so far in Asia, and I think that many traders are looking ahead to the catalyst, the latter part of this week. We have the OPEC Plus meeting, we have Lagarde speaking, and we've got a bunch of data, not least the jobs data out of the US. But short term, probably the most excitement in markets is around crypto. We've seen that before, but this time it's actually very, very strong gains in the crypto space. Obviously, they've been really under pressure in the last few weeks, the last couple of months, and it needs to be put in context that while they are very large gains, they're just bringing us back to levels we were seeing only in the middle of last week.
Okay, so there's a lot to focus on towards the end of the week, certainly from a data perspective, but we've got lots of interesting stories to talk about in the meantime. Just want to take you to some breaking news across the Bloomberg, which talks about Burberry, the luxury goods company. Marco Gobbetti, we're getting some news about him. He's been at the helm of this business since 2017, and I was just checking the date because it didn't seem all that long ago. May 2017. We're hearing here he has the intention to step down as CEO, and the company, the board, will now begin a search for a successor. We'll certainly keep an eye on that share price at the start of trade. We're just under an hour away then from the start of the cash equities trading session here in Europe. So let's have a look at those futures with what you said in mind there, Mark, then the fact that it's been a quiet session through Asia. I know the Hong Kong markets were actually closed for the morning because of a storm in that particular city. But we are expecting Hong Kong opens in the afternoon, is open in the afternoon. Let's have a look then at the European equity futures picture. Looks fairly flat, doesn't it? And actually Friday's session was also fairly flat. US equity markets were mixed on Friday, and now we see in the futures picture also flat, maybe slightly more upward momentum there, flat to positive maybe on US futures. We see certainly NASDAQ futures up by 0.1%. But things do look fairly quiet then, Mark, but there are some interesting things to trade around. There's some interesting themes out there. I suppose from a top level, we're looking at talk of recovery in various parts of the world, but keeping in mind the virus variants and keeping in mind the pace at which central bank support will be withdrawn. What is the GMM saying to you with all that in mind?
Yeah, well, actually, despite the quiet session, there are actually a few things to draw attention to on the GMM screen. So first of all, we're generally seeing a little bit of dollar strength and that Asian currency weakness. That's one session one theme that's been very apparent, even though it's very soft weakness at the moment. It is across the board. Another one is we are seeing this idea of yields kind of gently creeping higher. And as we've discussed a lot over the last week, I think this will generally be a theme for the second half. Not necessarily panic moves, although I'm sure we'll have some of those. But overall, we're going to see bonds on the back foot in the second half because the Fed has opened up the idea that it's okay to slightly tighten policy at the margin, and that's going to be the theme of the second half of this year. The final thing I want to draw attention to is that if you look at that commodities column, we've got a number of green boxes. Commodities are generally stronger, but copper weakness, and that has been a real theme of the last month or two. The copper has been a standout, weakening, leading kind of metals weakness in this idea that China is targeting metal strength, very concerned by it, but the rest of the commodities are starting to be dragged higher because oil strength just won't stop at the moment, and I think that's a theme I'm going to return to later on in the program.
Yeah, absolutely. We'll talk more about commodities then at 7:30. We're on the commodities space as a whole. We're set to cap the 5th quarter of gains this week, so certainly a lot of momentum for the sector as a whole. But as you point out, there's divergence within it, which is interesting. Let me ask you about what's going on the virus then, Mark, and how much this is a markets narrative or not. Clearly, it's a worrying trend when you start to see variants of concern popping up with ever greater veracity in certain parts, or as an ever greater threat rather in certain parts of the world. So from Australia to Malaysia, to the Philippines, to Thailand, to Bangladesh, various places, we are seeing things moving in the wrong direction. In some places, not in the wrong direction at any great pace, but certainly not quite the theme of reopening we were dealing with just a few months ago.
So investors, traders, people are generally very, very focused on this virus story in Asia today. It's not driving markets at the moment. And I guess what the question is, when will it drive markets? And that's kind of one of the issues. There's a little bit of the boy who cried wolf in terms of that we've seen many virus resurgences in the last few months that have just been entirely ignored. So when will that dynamic change? What is the exact catalyst we need for this to suddenly become a scare again? Now, one interesting idea raised by my colleague Garfield Reynolds is that up until the Fed meeting, the idea of a virus resurgence just meant more easing from central banks, just more liquidity out there. And therefore, ironically enough, if we got a bad, scary headline on the virus, it's not necessarily bad for markets. It just means there's more money to pump up those asset prices. However, now that the Fed has kind of changed the backdrop tone, maybe that dynamic changes. And he's suggesting that if we continue to get kind of some scary headlines on the virus the next couple of weeks, headlines that wouldn't have scared the market before might now do so, given that changing monetary policy backdrop. But no sign of it yet in Asia this morning. We'll have to see.
Yes, and I suppose if you take that thinking on board, then you have to ask questions about, to what extent is central bank thinking set in stone? And many central banks would probably tell you it isn't. And so you wonder whether there is then another reaction function to take account of. Let me ask you about where Treasuries head then, because I know you said at the end of this week there's sort of more to trade around perhaps when it comes to the data. But looking into the second half of the year then, are you expecting that we look at gradual bond weakness, gradually higher interest rates? Is that the way that the markets are positioning themselves?
I think markets' short-term positions have been cleaned out, and I still think they're waiting to kind of form around a new theme at the moment. There's still quite a bit of debate out there about whether the curve should steepen from there or whether kind of steepening was kind of killed by the recent move, because the Fed has kind of implied that, hey, the reaction function's changed, they might be willing to raise rates at the front end at some point, and therefore we don't need a curve that needs to steepen on this idea that the Fed will be easy forevermore, even in the face of a very serious inflation threat. So there's a little bit of debate what happens in the curve, but I think the backdrop here is that, even if it's not necessarily through intentional steepener plays, I think we will see curves steepen a little bit, just that the bonds are generally going to sell off a little bit, and the front end's hard to sell off too far because we know that monetary policy at the very front end is kind of anchored, or at least semi-anchored, whereas the long end there is that more flexibility. So I think we will probably see some steepening. We will see yields creep up at the long end, and I'm sure at some point we're probably going to get some scares in that theme, but that's not the central kind of story we're going to play.
Let's get your thoughts then on crypto assets this morning, Mark, because here in the UK, we've had this really interesting story, a UK ruling, the UK banning a Binance affiliate, giving the firm until Wednesday of this week to comply. It's an interesting asset class that takes higher levels of regulation as a positive because it suggests broader acceptance. That seems to be one of the narratives going around this morning.
Yeah, very much so. Eddie van der Veld, our colleague in London, basically has made this argument a couple of times. The idea that ultimately the more regulation you get, the better it is for Bitcoin. But that's the longer term story. I think it's kind of a bit bumpier than that. I'm not sure here the regulatory scrutiny here is the exact reason for why it's higher today. I think, as I said, it has to be put in context of just how severe the losses were over the previous few days. And we're just seeing a bit of consolidation. I'm not saying that it's necessarily the next move is going to be lower, but I wouldn't read today's bounce into saying the next move is going to be higher either. Either way, the last couple of months have been very painful. We're in this kind of new, much lower range. We're bouncing in that kind of wider range, and we have to see where the next direction is. For what it's worth, I do think that we haven't yet finished the kind of downside clean out of this cycle. We've seen these severe retrenchments in crypto before. This one is not as big as prior ones. I think there's probably more to go, but I understand that there's plenty of debate around that view.
Okay, always plenty of debate when anything crypto is mentioned. Bitcoin and Ethereum both trade stronger than this morning. Remember, you can get up-to-date analysis and insight from the Markets Live team. Mark and his team can be found at MLIV Go. That is the function to use on your terminal. Coming up, the parties of Marine Le Pen and Emmanuel Macron are hit by poor results in the second round of France's regional elections, leaving the outcome of next year's presidential poll increasingly uncertain. How much read across is there between these two votes? We'll get all the details. Plus, as the Wuhan lab leak theory gains ground in public discourse, we hear the story of the last and only foreign scientist to work there, who paints a different picture in today's Big Take. Up next, BNP Paribas chief economist William Zevelda joins us. We discuss all the latest market action and how much of a risk the Delta variant poses to the economic recovery and reopenings. If you have any questions for our guests, please do send them to us. We love to hear from you. IB plus TV Go is the function to use. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the European Market Open. We still have 40 or so minutes to go until the start of the European trading day. In fact, more than that, 48 minutes to go until the start of the European session. Things look fairly flat, though. Futures looking fairly flat this morning. Now, concerns about the Delta variant are growing across the world. South Africa has raised its alert level, and Sydney has gone into a 2-week lockdown to fight an outbreak of the variant. It raises further questions about reopening of the global economy. We're joined now by William de Velde, Chief Economist at BNP Paribas. William, really nice to speak to you. And I know that you've been thinking a lot about the pace of reopening and the pace of growth that we can see from the US economy, from European economies. Clearly, we have the Delta variant in certain parts of Europe and certainly in the UK. You talk about in your notes a strong growth in the US, accelerating growth in Europe, and you talk about this as being something that clients are taking as a given. Is there a risk then, if things do need to be slowed down at all, or if we go back into certain measures over the winter due to not high enough vaccination rates, then we have to reassess growth numbers?
Clearly, I think between now and the winter, the Delta variant is going to be an issue where I think it will have predominantly a sector effect, because the measures that are being taken are very local. Think of Sydney, and think of the other examples that you have given. This can have an impact should have an impact on leisure, on restaurants, on tourism. Also think long distance tourism as well, that people would be reluctant to go to exotic places and so on. Beyond that, it's way too early to say that it would have similar consequences like we have seen in the lockdown waves since more than a year. So the base scenario is that we are still heading towards a very strong recovery. It would, of course, be a totally different story, as you say in your question, that towards the winter we would have, because of stalling vaccination campaign and even more new infections, that would, of course, change significantly. But I think for the moment that seems still, fortunately, unlikely.
Good morning, William. As an economist, what's the best way to measure the likely impact of these virus stories, these virus headlines, and how much the scare is? I mean, we were using mobility trackers over the past year, but that might have changed with more of a work-from-home environment, and people are more familiar with that. So what exactly do you watch for high-frequency indicators to see the impact of virus flare-ups?
Well, the mobility is good for, we use it as a proxy for retail sales, household spending, and they're pretty good. For the rest, we are looking at survey data as well, very importantly, like anybody does. And as you mentioned, indeed, with working from home, the economies have been able to function at very high levels of capacity, without needing to have as many people commuting to work, etc. The measure of, tying into your earlier question about possible new infections, etc., that is where the hospitality and leisure mobility is very useful, because it will immediately show whether we already have a negative impact or not.
Thinking about growth rates and how investors interpret them or how the markets react to them, William, you talk about how the US growth picture is peaking almost as we speak, in the second quarter, and you say that the Eurozone growth area will peak in the third quarter. If we know that's coming, if we know that, we can't sustain incredibly high levels, which are in themselves a reflection of incredibly low levels the year before, we can't sustain that into the future. Should that come as a surprise? Should that shake investors? Should that unnerve us?
Well, eventually, I think it will end up having an impact when this quarterly growth slows. But before we see that happening, we will also see at the high-frequency data, or at the monthly data, that actually they're starting to roll over. As you get very high in terms of survey data, think of the PMIs, or in Europe, economic sentiment, we're very high in the historical range, so it means that the likelihood that it would go higher still is declining, actually. That likelihood is going down. Now, I think for the moment, markets are not yet playing that because it's still a bit too early. But as we go into the fourth quarter of the year, as you're getting closer to that, I think will be a theme that will be played by markets. We also have to be aware of the fact that when you look at fourth quarter consensus compared to third, we should also be cognizant of the spillover effect, the acquis de croissance, like they say in French. So when you have growth accelerating, say, in the third quarter, you start at a high level going into the fourth. So automatically, you also have, you already have a good pace of growth. So the perception of growth slowdown in the fourth quarter could be even slightly bigger. And this is something that would be very important for bond markets. We also have observed historically that when things like the ISM start to go down, that immediately the net upward revisions also start to decline. So analysts have more and more a tough time to continue to upgrade as much as before the corporate earnings outlook, which is all very understandable, but I think we need to get ready for that during the fall of this year.
William, I understand that we're in a little bit of a sweet spot right now, but you think it's going to get a little bit more scary, or at least investors are going to trade that scary theme as we get towards the autumn or get closer to winter. But given that investors are enjoying being in those kind of carry trades right now, there's no imminent scare in the headline, what's going to be the exact catalyst to start pricing in that more forward-looking scary outcome?
I think one important element is going to be that surprise data positive surprises will start to wane. We've already seen it in the US. They continue to be very high. I'm talking here about macro data. The other element to watch is, of course, corporate surprises. Guidance coming from CEOs, from companies, how that looks like. So all these elements, what they will do is, I suspect, is they will morph into a new narrative, which is saying that, well, third quarter was fantastic. Before that, the second quarter was fantastic in the US. But now gradually we're going to on a path towards normalization. Now, I do want to insist that it will still be very strong growth above potential, but not be as extraordinary as we will be seeing over the summer. And it also means that depending on the asset class you're in, it will make a difference. If you're looking at corporate bond, for instance, what matters is that companies continue to generate the cash flows for earnings for equity investors. Earnings growth is far more important. So I suspect that the sensitivity to the rollover of sentiment is going to be bigger.
Okay, thanks so much, William. Really nice to speak to you. Have a good week. William de Velde, Chief Economist at BNP Paribas. Thank you very much for joining us this morning. Let's get a Bloomberg First Word News update. For that, here's Laura Wright. Good morning, Laura.
Good morning, Anna. President Emmanuel Macron and far-right leader Marine Le Pen both look set for disappointing results in France's regional elections. The president's La République En Marche movement is set to get less than 7% of votes, while Le Pen's National Rally scored 20%, but failed to win any region. The record low turnout leaves the outcome of next year's presidential election increasingly uncertain. The US has launched airstrikes against Iranian-backed groups in Syria and Iraq. The Pentagon says the strikes were aimed at facilities used by militias that launched drone attacks on US personnel in Iraq and were intended to send a clear deterrent message. The UK's new health secretary says his top priority is ending the pandemic and getting the country back to normal. Former Chancellor Sajid Javid was named to the post after Matt Hancock resigned following the emergence of a video of him embracing a senior aide in his office in breach of COVID guidelines. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Anna.
Laura, thank you. Laura writes here in London. Now, coming up on this programme, Swiss lender UBS is set to let staff adopt a permanent hybrid work model in a bid to be more competitive in the field of recruitment. We will bring you all the details next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the European market open. Still 40 minutes to go until the start of cash equities trading. This is the picture, fairly flat this morning. Now, UBS will permanently allow as many as 2/3 of its employees to adopt a hybrid model of working from home and the office. That is according to a Bloomberg source. The CEO, Ralph Hamers, is leading the move as the lender seeks to be more competitive in recruitment. The policy sets a stark contrast between the Swiss bank and many of its US rivals. Joining us now is our finance and investing editor, Patrick Winters, who's in Zurich. Good morning to you, Patrick. Why is UBS then going with this policy? They think it helps in recruitment and retention, perhaps?
Well, it's an interesting move, and it clearly seems to be going against the trend on Wall Street to bring employees back to the office. And I guess the backdrop is, of that, of course, is a fight for talent between banks. A couple of interesting points from earlier in the year. So UBS doled out a bonus, quite a significant one, for junior employees a couple of months ago. And then they had a bit of a setback with a cringeworthy promotional video about the day in the life of an investment banker, which kind of followed her around as she carried a yoga mat and had mindfulness breaks, which was perceived as a bit tone deaf. So, it is a fight. It's a fight for talent. I think it's a positive move by Ralph Hamers, and they're looking at UBS. It's both an international investment bank, but it's also a very traditional conservative Swiss bank, and it looks like he's trying to change that.
Good morning, Patrick. And given this is all about the kind of hiring competition with other banks, how does their policy compare with other banks?
So right now it seems like UBS is one of the front runners in allowing people to have this flexibility over a long period of time. And looking at what some of the US Wall Street banks have said, they seem to be a lot more strict. It seems to be a lot more of this kind of old school culture of having people in the office and staff sitting at their desks. It seems like UBS is definitely moving away from that, but perhaps it reflects the reality that senior managers have been working from the chalet for large stretches of lockdown, and probably some still are working from the chalet. So you can't enforce having younger employees in the office if senior managers have got used to not doing that.
Why does working from a chalet sound so much more glamorous than just working from home, Patrick? Thank you very much for bringing us the story. Patrick Winters there in Zurich. Coming up on this programme, a tumultuous week in European politics. A new British health minister and an uncertain ballot in the battle for the French presidency. We'll get all the details next. We'll focus on this man who will now lead health efforts in the UK, Sajid Javid, the new health secretary in the UK. We'll also talk about French politics, though. What can the regional elections tell us, if anything, about the presidential elections due next year? That's next. This is Bloomberg.
G7 today need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
Climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated! The world is possible!
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour until the start of the cash equities trading for this Monday. And for this week, of course, European equity market futures looking fairly lackluster, fairly flat. Let me just get to some breaking news across the Bloomberg that tells us, a red headline tells us that Salvatore Ferragamo is to name Marco Gobbetti as CEO. So we just mentioned at 7 o'clock that he was going to be stepping down from Burberry. He's been there since 2007.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And this is our most read story on the Bloomberg in the past 8 hours. Talks about the president targeting two weapons that the richest 0.1% use to avoid taxes. We'll explain exactly what this is all about in just a moment. First up, though, let's get another update on the trading day. Here is Charlie Pellet.
Thank you very much. We're looking at records. Carol Masser for the S&P, NASDAQ 100 index. Right to the numbers. We'll give you the why in a moment here. S&P up now by 2 points. Gain there of 0.1%. NASDAQ surging 97 points to 14,457, up by 0.7%, and extending its year-to-date gain to 12.1%. The NASDAQ 100 index up now by 0.9%. A down day for the Russell 2000, falling 0.6%. Dow Transports lower by 0.8%. Dow Industrials down 158, down by 0.5%. S&P up 3, a gain of 0.1%. 10-year yield 1.47%. Gold down 0.1 at $17.79 the ounce, lower by $2 the ounce. West Texas Intermediate crude down 1.7%, $72.80 a barrel on WTI. Oil declined amid expectations of an upcoming supply increase from OPEC plus producers at a time when the Delta variant is threatening a recovery in demand already underway. Medical experts, meanwhile, are warning unvaccinated Americans about the Delta variant. Dr. Joshua Sharfstein, Vice Dean at the Johns Hopkins Bloomberg School of Public Health, says you got to get those shots, and here's what he had to say.
Given how quickly it is spreading, it should be a concern because it can destabilize even countries that have done a pretty good job vaccinating. So for that reason, I think all these warnings are reasonable, and it's an extra push to get people vaccinated.
Dr. Joshua Sharfstein of Johns Hopkins. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares, they're up right now by 0.2%. Its German partner BioNTech, the ADRs, down 0.9%. AstraZeneca up 1%. Moderna out of Cambridge up 1.1%. J&J Johnson & Johnson down 0.3%. Recapping stocks mix. S&P, NASDAQ, both at records. S&P up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks. I mentioned this was the most read story. It is the most read story on the Bloomberg on this Monday. It's about President Biden targeting two weapons that the richest 0.1% use to avoid taxes. So let's find out exactly what's going on. Bloomberg News senior tax reporter Allison Verspril is on the phone from Washington, D.C. Allison, so what exactly are we talking about?
So we're talking about the, details of the Biden proposals that were released late last month. I think at first people kind of needed some time to dig through these, but on close inspection, we learned that the Biden administration's plans would, essentially dismantle these two popular planning techniques. We have one that's called a dynasty trust. Essentially, you can set these up and they aren't, incurring gift, estate, or generation skipping taxes for, multiple generations. So the Biden plan would actually charge a capital gains tax on appreciated assets in these trusts every 90 years. But because of the way it's drafted, we could see taxes come due as early as December 2030. And then we also have language that would charge capital gains taxes when property is transferred into and out of trust. And in talking with the Treasury official, this is aimed specifically at this very common tool, if not complicated tool, known as the intentionally defective grantor trust. So as people start,
it's a great name.
Yes, yeah, it's definitely a long name, definitely an estate planning type name. But people have started to become really concerned about some of this language.
How did we kind of miss this earlier?
Well, the broad strokes of the outline that the president was talking about didn't specifically go into how trusts were impacted. And then even getting into the Green Book language, some of it's a little bit vague. I think the dynasty trust portion was a bit more obvious than some of this other language on transfers. And, I'm told that the second piece of that could affect even beyond, these intentionally defective trusts that I mentioned.
Yeah.
But we'll have to see how kind of the legislation is drafted and, IRS regs even further beyond that.
You write in your reporting, Allison, and it's not just a U.S. thing. We're seeing it around the globe where governments are looking, countries are looking to implement new taxes on capital gains, inheritance, basically go after the wealthy when it comes to paying maybe a greater share, a fairer share that some might argue, of taxes.
No, that's absolutely right. We see these in Stockholm, we see these in other countries. And I think the idea here is that obviously COVID-19 has, poked these massive holes in government budgets. And during that time, especially in the U.S., you saw that the rich weren't really necessarily impacted like the rest of, the country. So this has definitely been a priority in the U.S. It's definitely a priority across the globe.
All right. So what's going on with all the financial advisors to the wealthy? Are they like, wait, what? Trying to figure it out. Like, what's the feedback? Because there's a great quote in your story. One lawyer, I guess that advises individuals, or a tax lawyer, what they're doing is creating a whole new tax regime. And it sounds like that's what's going on.
So, if enacted, I think people are starting to say that they would really have to reconsider the techniques they're using. I don't think this makes planning go away. There are always going to be smart planners that can help people get around their taxes.
Right.
But these are things that have become really popular in recent years. And so, essentially, people will question, is it worth using this specific tool that I've had in my arsenal for the last several decades?
And you had...
So there's definitely consideration of that. Yep.
Two key words. You said if enacted, right? The final language, as we know in any kind of bill or legislation, ultimately it's up to Congress how they lay it out.
Definitely. And, we've already seen, so we have this infrastructure package that's now moving along that would be bipartisan, that doesn't have any of these tax increases in it. There has been discussion that Democrats would pursue in the budget sort of their own standalone package that would make some of these tax increases along party lines, which has obviously created some controversy. But you have to get essentially everyone, every Democratic vote in the Senate. There's not a huge margin in the House. And so it still remains to be seen, if this gets enacted, if this gets pared back at all. So we'll just have to see how the conversation moves forward.
Hey, just 15 seconds here. How quickly does it move forward? Is it before the summer, before the end of the year? Is there a bit of a timeline? Just quickly.
I would not anticipate, if we're talking about reconciliation, that usually starts coming together around the fall. You might have some things beginning to crystallize, or discussions are definitely going to be happening this summer, but you have to consider there's the recess in August.
Got it.
So I see most of the action coming in the fall.
All right, good to know. We'll put that on our calendars. Allison Verspril, thank you so much. Senior tax reporter at Bloomberg News on the phone from Washington, D.C. We're going to stay in the nation's capital, and get a check on world and national news with Nancy Lyons. Hey, Nance.
Hey, Carol, you were talking right about it. Senate GOP leader Mitch McConnell is demanding that President Biden pressure Democratic congressional leaders to keep separate the bipartisan $579 billion infrastructure plan and a larger bill that would carry out the rest of Biden's social agenda.
None of the Republicans during the negotiations and the Democrats that were in that group talked about it being linked to anything else.
McConnell is hoping to head off an effort by House and Senate Democrats to use a fast-track budget process called reconciliation to pass a Democratic-only bill with trillions of dollars in spending as well as tax hikes on the wealthy. The Supreme Court is upholding a ruling that said transgender students can use the bathroom that matches their gender identity in schools. The High Court refused to hear an appeal to a lower court ruling that said treating transgender students differently violates Title IX, a federal law that bans sex discrimination in schools. The ruling is a victory for Gavin Grimm, who was born female but identifies as male. after years of legal battles with the school board in Gloucester County, Virginia.
This victory is important and wonderful and will not go underappreciated by me, at least.
Grimm says it's frustrating, though, that it took so long to affirm transgender rights. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. I'm Carol Master. Joining me once again is Charlie Pellet of Bloomberg News. Charlie, a couple stories about the labor market on the Bloomberg, and it's a nice kind of tee up to the monthly jobs report on Friday. One, I want to go right to this one because I find it interesting. Kevin Orland of Bloomberg News writing about the vanishing teller jobs, and these are jobs that traditionally have largely gone to women, and it's been an entry point for some women into the banking industry.
Indeed, 4 out of 5 bank teller positions are held by women. But I think to put this story in context, Carol Master, I ask a rhetorical question of our audience, specific question of you. When's the last time you went into a... You knew where I was going. I'm not going to ask the question, but exactly to my point, right? I mean, for all of us, it's been ages since we've actually walked into a bank. I mean, you know, perhaps 10 years ago, I would go in to pay a credit card bill because I didn't want to, the bank happened to be nearby. It's a hassle. Ever since my landlord started taking electronic payments, I don't even write checks anymore. So there's no need to go into a bank branch.
I think the last time I did it was something I had to get notarized.
Yeah,
that's why. No, and it's interesting, those positions, they talk about tellers. The number of tellers has dropped more than 20% in the U.S. and Canada in the past decade. And then they're talking about, because of the pandemic, to fall further over the next 10 years. So we could see decline even faster because we've seen COVID-19 accelerate some of the trends, certainly in the financial industry and the banking industry. So it may be setting off another story. We're not going to have time to do it, but it's a great story about Katya Dmitrieva, and it talks about the U.S. job market beginning a weird summer.
Indeed. And, of course, the jobs report coming out Friday, it is forecast to show that the picture for employment is improving somewhat. Median forecast of economists as of last Friday was for a gain of 695,000 in payrolls. Of course, Friday morning, 8:30 a.m., Wall Street time, complete coverage.
And that's despite dynamic economic growth in the U.S. It's still very tricky and unusual and volatile when it comes to the U.S. labor market. Charlie, thanks. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow lower by 180 points, down 0.5% off session lows. S&P holding on to gains, trading at a record, up 3 now at 42.83, up about 0.1%. Nasdaq higher by 104 points, up 0.7, record there right now. The Nasdaq 100 index up 1%, also at a record. But the Russell 2000 trading lower, down 0.7%. Dow Transport's tumbling, down by 0.9%. After lagging behind the reopening trade last month, tech companies are outperforming today. Stocks hovering right around records. Treasuries climb. The dollar is fluctuating. 10-year yield 1.47%. 10-year up 14.30 seconds. Gold is down 0.1%, 17.80 the ounce. And West Texas Intermediate crude down 1.7%, 72.82 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks for the update. Well, in the current issue of Bloomberg Business Week magazine, it's a Bloomberg exclusive looking at the U.S. unemployment benefits given out during the pandemic. Who got them really? That story from Bloomberg News senior trade and globalization reporter Sean Donnan. He joins us from our 99.1 studio in Washington, D.C., along with Business Week editor Joel Weber in our Interactive Broker studio in New York. This is such an important story, especially with the debate about why workers aren't coming back, Joel, because they're getting lots of benefits. This story really looks into the numbers.
And it's been one that I think culturally we've been aware of for a while, but what Sean Donnan and Reed Pickert did in this particular issue was go even bigger. And the number that they came up with was that there are at least 9 million Americans who were thrown out of work by the pandemic, and they didn't receive unemployment benefits, despite there being billions, trillions of dollars that flowed into the system.
Right.
And as they were reporting that, obviously that big of a number sticks out to you, and then you start to wonder why. So Sean, I'll bring you in here. Why? What happened? What went wrong?
Well, I mean, the answer is that, and we've all learned this in the last year, is that the unemployment system in the United States is just in really lousy shape. And it's everything from being overloaded with an unprecedented amount of claims, or as I like to think of, people reaching out for help, and also old IT systems, and just trying to process these applications, and also getting caught up in this question of fraud that's been hanging over the system as well. There's been a lot of, when you dig into the system, a lot of state officials talk about the high number of fraudulent claims that they've seen, but you scratch the surface a little bit and you discover there's also a lot of innocent people who've been accused of fraud. I was on the phone this morning with someone who reached out to me after seeing our story, and who says, they've been waiting 6 weeks for their latest unemployment benefits after getting benefits without any problem for most of the last year. And the reason is that the state of Maryland says they can't verify their identity, even though this person has sent all sorts of IDs their way. Well, so it's a system that's overloaded, but it's a system that also in a lot of places seems to be kind of biased towards assuming that someone reaching out for help may not always be doing so with the right intentions.
What's great about this story by you and Reed, Sean, is that we often see headlines, we see numbers, but we forget that there are people behind those numbers. Take us to either Barb's story or Ray's story. You actually get into their details.
Yeah, look, I just got an email in the last hour from Barb Ashbrook as well in Indiana. And Barb is like a lot of people in this country in that she kind of cobbles together a living on a couple of different part-time jobs. Before the pandemic, she worked 20 hours a week at Dollar Tree, and she worked 20 hours a week or so as a cashier in the food court in Eli Lilly's, one of their office buildings in Indianapolis. And when the pandemic hit, she lost that job in the food court because no one was going to the office anymore. She applied for unemployment, and she was told that she wasn't eligible for unemployment because she made more than $121 a week at a Dollar Tree where she worked as a cashier. And that is more than she would have received in benefits from the state of Indiana just to make up for her lost income at the food court job. Now, you just got to back up for a second there. Imagine trying to exist on $121 a week, first of all. Second of all, the benefits that she would have been entitled to with the federal top-up at the time would have been more like $720 a week. That would have completely changed Barb Ashbrook's experience in this pandemic. And then it kind of gets almost into a weird Kafkaesque tale where a few months after she was denied benefits, all of a sudden some money turned up in her bank account from the state of Indiana. And she sent most of it back right away. It took the state a couple of months to acknowledge that, and now they've accused her of being overpaid these benefits. And at one point in March, they were threatening to garnish her wages and her tax returns. And she reached out for help, and she didn't get the help she needed, and then she got caught up in this bureaucratic nightmare. And the message in her email just an hour ago to me was, I'm never going to apply for unemployment benefits again. That's the big lesson from here, is that there's no one there to help me.
Another lesson or insight I'm interested in is you mentioned Indiana there, Sean, and it really reveals what a patchwork quilt of a country we have, because every state has its own systems and its own problems that they have to wrestle with here. What did you learn on that front? How inconsistent are the states?
Look, I mean, there's huge inconsistency in the states. And this is the grand bargain that was struck in the New Deal was for the states to control a lot of how unemployment benefits are paid. And that means they get to decide how much is paid on a weekly basis. So you have some states that will pay you $100 or so a week, up to $800 a week in the maximum level in Massachusetts. That's even before this federal top-up that we've had during the pandemic. And then you have also states that are incredibly strict in terms of who they will give benefits to. If you lived in Arizona and you worked 30 hours a week at the minimum wage job, you would not be eligible for unemployment benefits because you would not hit their minimum income threshold. In Indiana, a third of the people who applied for benefits in that state did not receive any benefits.
So I always think about when you do something like this, and you guys went through a ton of data. It's not always perfect, right? Because the reporting isn't always perfect. Where's the problem? Is it that we need federal guidelines on this, or what do we need? What is the problem? How do we fix this? Because we're going to have another crisis.
Yeah, no, absolutely. And I think that's the real thing that's exposed here, is that the system that we have is too narrow in terms of who it defines as being eligible for benefits. So we need to think about how the economy has changed, and we need to broaden out the system to catch more of these people who are there. And we also need to understand that we need to get this money out there to people quickly, because that money has actually been hugely effective in reducing a lot of the broader economic damage that we've seen in this pandemic. This is a great way to get money out there when it works. The problem is it just doesn't work enough and for enough people.
Well, it's an incredible read, and I know you guys did, like I said, going through all the data points. Sean, thank you so much. Really appreciate you bringing it to us. Sean Donnan, Senior Trade and Globalization Reporter at Bloomberg News from our bureau in D.C. Joel Weber, Editor of Bloomberg Business Week, here in our Interactive Broker Studio. Important story.
Absolutely, and one that there's the wrestle with the amount of data that they had to wrestle.
I can only imagine.
It's amazing.
There is a part right at the end of the story that talks about
It's
methodology.
like here's a really hefty paragraph to understand how we actually dealt with the numbers,
which is what it's all about. All right, Joel, thanks. Hey, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to come right back. We're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Coming up next, Bloomberg New Economy on the catalysts who are changing the world for good in the future. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline from the Bloomberg Professional Service. The FTC antitrust case against Facebook has been dismissed by a judge. Facebook quickly rising to a session high. Facebook, I should add, now at a record as the judge dismisses that case. Facebook shares now up by 2.3%. Again, a record on FB Facebook, 349.14. So again, developing stories. Stay with Bloomberg for the very latest. Definitely going to repeat this headline. The FTC antitrust case against Facebook dismissed by a judge. We are looking at an update, mixed day right now. The S&P higher by 4, a gain of 0.1%. The Dow is down 189, down 0.6%. NASDAQ up 120, higher by 0.8%. 10-year yield 1.47%. Right now we have got gold down 0.1%, 17.78 the ounce. West Texas Intermediate crude down 1.7%. 72.83 a barrel. After lagging behind the reopening trade last week, tech companies outperforming today. Among some of those names, Apple up 1.4%, Amazon up 0.8%, Zoom Video Communications surging by 4.1%. Wall Street, meanwhile, is looking ahead to Friday's jobs report. As for the employment backdrop right now, Lori Heinel is Global Chief Investment Officer at State Street Global Advisors.
Well, we actually think that the employment picture will continue to improve. But the other thing to keep in mind is that we need productivity enhancements too and technology investment. And so there are early signs that we're starting to see a little bit more capital investment. And in the service economy in particular, which has really lagged manufacturing in terms of industrialization, in terms of technology, in terms of productivity enhancements, that's a place to watch as well.
And again, repeating our top story, the FTC antitrust case against Facebook dismissed by a judge. Facebook at a record. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. I'm Carol Masser in our Interactive Brokers studio. Bloomberg Business Week brought to you by SEI. Asset managers don't get results that are off the charts when their solutions are off the shelf. Learn how SEI's operating platform can turn infrastructure into a competitive advantage. You can find that at SEIC.com/IMS. Well, out of darkness comes light. We know that. And out of the ongoing pandemic, our Bloomberg New Economy team has taken a moment to look at how the catastrophe that has been the coronavirus has also been a catalyst for the delivery of multiple vaccines in record time and new technology that holds promise for so much more. That led to our group highlighting the 31 people who are also catalysts for change, charting the global course out of the pandemic and toward a brighter, more sustainable future. Here to tell us more about it is Bloomberg New Economy Editorial Director Andy Brown. He's in our Interactive Brokers studio. I love this, and I've been lucky enough to participate a little bit in it. Tell us about your thinking about how this came to be, Andy.
Yeah, look, we don't want to downplay the severity of this pandemic. It's caused immense destruction.
And not done.
3.5 million, 4 million people dead and about to make a resurgence in Africa potentially. But what we saw coming out of this catastrophe was a wave of creativity. And it struck us that, we really are right on the brink of a new era of discovery. And, in part it's about need, right? So people in lockdown were desperate for food delivery. And so, from Lahore to Lagos, you have food delivery companies popping up, partly necessity. Millions of unemployed people all over the world dreaming up, really clever, smart ideas for startups to give themselves an income, but also driven by technology that, the pandemic coincided with this moment that a lot of fundamental technologies, which have been decades in the making, are suddenly ready to deliver these breakthrough applications. And of course, the classic example was the messenger RNA vaccine.
Right. And it's and they're now all talking about different uses for it. Take a step back even further, because Mike Bloomberg, of course, the founder of Bloomberg LP, Bloomberg Radio, Bloomberg TV, Bloomberg New Economy, he had an idea a few years ago.
Right. So he set up an institution called the Bloomberg New Economy. I'm the editorial director. And it's intended to bring together leaders from East and West, from the global industrialized North and the global South, to focus on the biggest challenges facing humanity. So as we were watching this process of creative destruction, if you like, play out last year, we thought to ourselves, what would it be if we brought together 20 or 30 of the world's greatest problem solvers, right? These are entrepreneurs and scientists and technologists and researchers and progressive policymakers, the very people that were working on the pandemic problem and associated problems. We brought them all together and formed a community called New Economy Catalysts.
What is great about this list, and you can find it at Bloomberg.com and on the Bloomberg terminal, they're not everyday household names, but these are people who are really kind of turning the world upside down in terms of either the data they're collecting or the work that they're doing.
Right, so I mean, that's the cool thing about the Catalyst, because some actually are turning into household names. I mean, one thinks of Noubar Afeyan, who's the, the co-founder of Moderna, which is basically putting an end to, or helping putting an end to this whole pandemic, right? But then you've got these other amazing figures like Shamim Nabuma-Khalisa. Not a lot of people know about her, but you know what? She is delivering cancer solutions, cancer screening to women with cervical cancer, breast cancer in the remotest villages in Africa. And the connecting thread is technology, right? She uses artificial intelligence and drones to build her business.
Which is, it sounds so simple, but, and for her, we know it was a personal story as well in terms of cancer, but it's just, she figured out how to take that technology and reach people who didn't normally have access to testing. Tell us about some other people.
There's just so many of them. I look, I mean, one of the biggest problems facing the world is food security, right? So, as a result of climate change, we may be looking at a 30% decline in agricultural yields to mid-century, at which point the global population is going to be 9 billion people. How do you solve that problem? Obviously, plant-based food. Again, we have a catalyst, Matthias Muchnik from Chile. He has set up a company that uses artificial intelligence to study plants at a molecular level and find the exact taste match for animal-based food. Who would have thought cabbage plus pineapple, gives you the taste of milk? Well, you and I probably wouldn't have dreamt that up, but an AI algorithm does. So, I mean, just a perfect example.
One of the verticals, I guess you might say, that you're looking at is space specifically, and we talk a lot about it as space is the next frontier. We know we have a lot of billionaires who are very interested in exploring space. We're seeing that go on. You guys tackle that as well.
Right. Well, those guys, the billionaires, often talk about space as an escape, right? So let's set up colonies on Mars, and we're going to look back on
leave all this behind.
Earth. Leave it all behind. Our catalysts are looking at space as a solution to the problems here on Earth. So, a great example. I mean, look, the frontier, you talk about the frontier has actually arrived. This year, even as the pandemic rages, we've seen 3 missions to Mars. 2 have landed rovers, 1 Chinese, 1 American, and 1 from the United Arab Emirates has orbited the red planet. So the UAE is actually looking to space-based technologies to build life after an economy after oil, right? And it's just inspiring a whole generation of kids in the Middle East to study math and science and technology.
So tell me, this event, it's happening this week, this Wednesday?
Yes, Wednesday, all day. Live broadcast, 6 hours. All 31, it was supposed to be 30, we got a bit carried away, 31 catalysts. And of course, you are going to be one of our star interviewers and MCs. We're really looking forward to this. It's going to be such an exciting event.
It's really pretty incredible. I don't even know how you whittled it down to 31, because I can just imagine, but they are people who are changing the world as we know it, which is incredible.
Building a new economy.
Exactly. Andy, thank you so much. Really appreciate it. Bloomberg New Economy Editorial Director Andy Brown. Check out it this Wednesday, the Bloomberg New Economy Catalyst, Wednesday, June 30th. You can find out more at Bloomberg.com. You're listening to Bloomberg Radio. Back to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey right, Carol. Rescue crews in Surfside, Florida are still working as if they'll find survivors in the rubble of that collapsed condo building, even after 5 days. An additional body was pulled out overnight, bringing the death toll now to 10, with 151 missing. Today, White House Press Secretary Jen Psaki said the president has no plans to travel to the site.
We always want to ensure that we're not pulling from local resources. We don't want to draw resources that are needed in the ongoing search and rescue operations and efforts. We will remain in close contact.
Psaki says the president does support a full investigation by federal agencies into the cause of the collapse. The Treasury Department has released a document called the Green Book that could disrupt dynasty trusts for the very wealthy.
The Green Book spells out how the Biden administration would force trusts, usually tax-free, to pay capital gains tax on appreciated assets every 90 years. But it is written in a way that would impose taxes as early as the end of 2030. The plan would also charge a capital gains tax when assets are transferred into or distributed from certain kinds of trusts. It is not clear how this will be put into practice because Congress still has to pass it and the IRS still has to issue regulations. In Washington, I'm Amy Morris, Bloomberg Radio.
Toyota is defending its donations to some Republicans who voted against certifying the 2020 presidential election. A company spokeswoman says the company does not believe it's appropriate to judge members of Congress for one vote. Axios reported over the weekend Toyota donated a total of $55,000 to 37 of the 147 Republicans who voted against certifying the election. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Masser joining me once again is Charlie Pellet of Bloomberg News. And Charlie, a couple stories about, once again, the financial sector getting back to work. And we see kind of different modes. UBS, they're going to allow 2/3 of their employees to adopt hybrid work. And then we have another story about Synchrony Financial. You know, it's the bank behind credit cards offered by Amazon and PayPal Holdings. They're going to begin to test its reopening plans, but they've got, I think, 3 different options for workers.
Indeed. And just want to pass along to our listeners, Carol, a developing story, another headline from the Bloomberg Professional Service. President Biden's Justice Department is probing Google's display ad business. So certainly an afternoon for headlines. This one worth repeating. The Biden administration is probing Google's display ad business.
Well, having said that, Google shares, it looks like they did pop up earlier in today's session. They're down just about 0.3%. We know any of these kind of investigations by regulators, whether it's here in the U.S. or over in Europe, especially in the U.S., it can take some time. But the stock is just down 0.3% at $25.31 and change a share. All right, so let's talk a little bit about work. So everybody's got different, within the financial community, right? Different ways.
Exactly. Very, very, very different. You had Morgan Stanley and James Gorman telling employees that work from home is an aberration. People should be back in the office. J.P. Morgan Chase, also one could argue, certainly leading the way in pushing people to return to the office. And you're getting banks, they're certainly not speaking with a unanimous voice. Indeed, they're all individual businesses. They know their customers, they know their employees, but very, very, very different approaches to getting people back in the office.
Yeah, I think, different firms are just figuring out, I guess, what works for them. And I think ultimately it'll depend on how it works longer term. But as we said, Synchrony is going to have 3 types of offices. Employees who have to work from virtual hubs, no physical offices nearby, will work remote permanently. Then there's so-called hoteling, where people will be able to book a desk when they need it. And then staff can work a hybrid schedule that gives them the option of having an assigned seat. So again, a lot of different methods. Charlie, thanks. I appreciate that.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The S&P, NASDAQ 100 index, all trading at records. 43 minutes to go ahead of the closing bell on this back-to-work Monday. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed today, with the Dow currently down 200 points. S&Ps are higher by 5, and NASDAQ climbs by 120. The U.S. 10-year yield at 1.48%. Gold is down 2. Bitcoin is up 5%. And transports fall 145 points amid weakness in the airlines. Among the main 11 S&P sectors, tech and telecom led. Energy and financials were under pressure. And leaders to the upside in the Dow, Intel and Apple, while Boeing and Chevron led to the downside. In other news, the FTC antitrust case against Facebook was dismissed by a judge. Facebook did spike intraday. And the Justice Department is probing Google's display ad business. In U.S. politics, McConnell says he needs to see the CBO score on an infrastructure deal. And in deal news, Thoma Bravo to take Quad private in a $2 billion deal. Wrapping things up, Herman Miller reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over at your Bloomberg Times Squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week, and this is Bloomberg.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
You are listening to Bloomberg Business Week, and today's Bloomberg Big Take, it's the exclusive that you have to check out. It's a story that only we have, and it's one that helps fill in some of the gaps when it comes to the debate about what was going inside the Chinese lab ahead of the coronavirus outbreak. This story is about the last and only foreign scientist in the Wuhan lab in China finally speaking out. Michelle Cortez has been covering the pandemic since day one. She is Bloomberg News senior health science and medical technology reporter on the phone in Minneapolis. I said finally speaking out. It really wasn't that. It was just a case of here's somebody who had an inside perspective, Michelle, that could give us an idea of what this lab that is so much in question right now and at the heart of debate when it comes to where did the coronavirus come from. She gave us some insight. She gave you some insight. Tell us about her.
So this is a serious scientist. Honestly, this story has been blowing up over the past 24 hours. And I was trying to reach her yesterday because we've been texting and talking quite a bit. And I couldn't reach her. It turns out she was in the lab all day. She had seen the story and she knew that people were going to be interested. But she was in one of the biocontainment suits in her lab working on her real stuff. So that's just honestly who she is, every bit of who she is. You know, when you listen to her speak in our story, we have some clips of her talking. You can see that she's just a very relatable person. She is saying that what she's been hearing about the lab, the Wuhan Institute of Technology or Virology, is not what she actually experienced when she was on the ground there. She's been in biocontainment labs all around the world, and what she saw there was very much like what she had experienced other places, and just couldn't really identify with how it was being characterized.
Her name is Danielle Anderson, as you report. She's an expert in bat-borne viruses, and she is, as you report, Michelle, the only foreign scientist to have undertaken research at the Wuhan Institute of Virology's BSL-4 lab, which is the first in mainland China equipped to handle the planet's deadliest pathogens. What did she tell you that really stood out for you?
Well, the most important thing to my mind was she was there in November of 2019. And remember, that's exactly the period of time where they believed that the virus was really starting to take hold. It blew up in December, but that they think that in September, October, certainly by November, it was starting to populate. And that allegation that it might have come out of this lab, she was in the lab, and we know how coronavirus works. We've all experienced it, sadly, especially here in the U.S. and New York, but all around the world. And the thing that's significant is that not only was she not ever sick while she was there, she also was very close to many of the scientists there, would commute in and out to work with them, had lunch with them, dinners, they socialized outside of the lab, and she doesn't know anyone else who was sick either. So certainly this was not something that was, spreading through this lab in any kind of a context. And that, I think, is really significant because we know for sure what was happening there. When she says she wasn't sick, she was tested to see if she had antibodies. No experience of that. And then her own personal experience on the ground, knowing those researchers, but also knowing that the protocols that they used was very specific, very detailed, very safe. And she said that there wasn't anything that she was seeing on the ground that would have led her to believe something went awry.
And as you report, as you always do, so balanced and you cover all angles, the question is, was China manipulating the virus? And according to your conversation and your reporting, there was no clear evidence that that was going on. And yet, as you remind us, some of the actions by China and the Chinese government, especially when it came to this lab, has raised some fair questions.
Exactly. A lot of scientists, especially, and other people were discounting originally some of the allegations, some of the accusations that this might have come out of the Wuhan lab. We heard quite a bit about it from former President Trump, and I think that it was dismissed by a lot of people as political rhetoric to try to badger China, some of this geopolitical posturing. But as China continues to not do things like not allow WHO in for more than a year, not allow CDC researchers who were on the ground to help out when they were there, like desperate to make a difference. They could see the freight train coming and wanted to help, and the Chinese government was not allowing that. That is raising some questions, and you see scientists like Danielle Anderson and others saying, we really need to get to the bottom of this. We need China to be open. We need others to not be attacking, but we need a collaborative approach so we can find out what happened here.
Exactly. And while you say, and you report that she still believes that the virus came from a natural source, we're talking about, right, an animal, she does say she's not naive and that it's not impossible that the virus spilled from the lab. Just got about 20 seconds left here, right? She still keeps that door open.
She keeps that door open. We know that viruses come out of labs all the time. They come out of animals. We need the answers.
All right, we're going to leave it on that note. Hey, incredible reporting as you have always done, especially with all things COVID. Michelle, thank you so much. Michelle Cortez, she is Bloomberg News Senior Health Science and Medical Technology Reporter. She's joining us on the phone from Minneapolis. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, it is Bloomberg Business Week on this Monday. I'm Carol Massler. My co-host Tim Stanovic is off. Coming up, it's the chart of the day, song of the day. I feel a lot of pressure, and I don't have an assist from Tim, but just going to muddle my way through. Dave's going to be up in just a minute. Right now, though, let's go back to Charlie Pellet. Maybe I'll get an assist from Charlie Pellet. Can you give me, some clues or
happy to help out? I've got this, Carol. I've got
Okay,
this. Here's
good.
what's going on. A number of developing stories this afternoon. Let's recap, reset. If you're just joining us, Facebook winning the dismissal of 2 antitrust cases filed by the federal government and a coalition of states. When a judge threw out the lawsuits, shares of the social media platform are higher. Facebook now has $1 trillion market cap. FB Facebook up now by 4.5%, a record 356.91. Antitrust investigators at the Justice Department have stepped up scrutiny of Google's digital ad market practices in recent months. This, according to sources, it shows the Biden administration is actively pursuing a probe that started under former President Trump. Parent company Alphabet, shares of Alphabet down by just about 0.2%. We're looking at a mixed market right now. 28 minutes to go with the Dow down 186, down 0.5%. S&P, NASDAQ could see records there. S&P up 7, a gain of 0.2%. NASDAQ up 135, up by about 0.9%. After lagging behind the reopening trade last week, tech companies outperforming today. 10-year yield 1.48%. Gold down 0.1%, 17.79 the ounce. West Texas Intermediate crude down 1.5%, 72.92 a barrel. Oil has declined amid expectations of an upcoming supply increase from OPEC producers at a time when the Delta variant is threatening a recovery in demand already underway. West Texas Intermediate crude down 1.5%. Medical experts continue to warn unvaccinated Americans about the Delta variant. Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television and Radio.
I imagine that is going to happen, particularly as the vaccines move from the authorization stage to getting licensed. I think it'll become more of a standard in this country, given the very strong safety record that they have and the fact that they'll be fully licensed. I think that probably is going to happen more and more.
Indeed, Dr. Sharfstein talking to us about proving that you actually are vaccinated before you can go to concerts, sporting events, or return to work. And the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks, Pfizer up 0.4%. Its German partner BioNTech, the ADR is down 1%. AstraZeneca's ADR is up 1.2%. Moderna up 1.5%. J&J down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Okay.
I think you used to love these guys. Go ahead, take it away.
Okay.
Who's the voice? It's from, I can't think of it.
Take off to the Great White North. And that would be?
What?
Canada.
Canada.
So think Canada.
Okay, think Canada.
Okay?
Yes.
I mean, obviously, it's Bob and Doug McKenzie, the characters of Rick Moranis and Dave Thomas, but the other voice in there is Geddy Lee, the lead singer of Rush.
That's what I was thinking of. Ken Martin. We used to, in the morning, before a 5 a.m. show, he would play a bunch of Rush to kind of warm us up before we hit the ground on our
I thought
TV
about
show.
playing Rush as well, Carol, but, our producer, Paul Brennan, he was all over Take Off. which is that song. And the reason, we're so focused on Canada is because the chart is focused on Canada. It's something that Bank of America put out the other day, just comparing valuations between Canada's benchmark S&P TSX Composite Index and the S&P 500. And the indicator they use to do that, forward price earnings ratios. So looking out 12 months, how cheap or expensive are stocks based on earnings estimates. And what you find when you run the numbers is that at the end of last week, Canada was 23% cheaper than the U.S. based on this indicator. You go back a couple of months, it was more like 27%.
It's a big discount.
And that was the biggest discount going back 20 years. That's how far back the chart goes. So, the basic argument they have is that U.S. stocks are looking expensive here, and maybe you want to look at Canada, and it's not just about valuations either. They see the potential for, the country's industries. It's more focused on energy and metals and those kinds of areas, that they may benefit more from a global economic expansion than perhaps the U.S. would with its focus on big tech.
That's where I wanted to go, because something can be on sale. As my husband likes to remind me, when something's on sale in a store, just because it's on sale doesn't mean it's a great buy. And so it's perspective, like where's the growth? We were just talking about quarterly growths for the United States, like what we're going to be seeing. I mean, they're going to be pretty dramatic. So you got to compare these things and look at that. But it's fundamentals, right?
Yeah, absolutely. And that's what we're talking about here. You can actually compare the PE, the forward PE on the S&P TSX to an index of developed markets outside the U.S., the MSCI World, ex-U.S. as they call it, and they're pretty much in line, around 16 and a half times earnings. S&P 500 over 21, based on forward projections. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, no song for this, but we do have a drum roll, stock of the day.
And it certainly deserves one the way things are going. Anavex Life Sciences. The ticker is AVXL.
Okay.
And it's a company that's working on a treatment for Parkinson's disease. Wow. And they came out with study results from a mid-stage trial that showed the drug met the goals of the research. So when you put that all together, the shares are up about 19% right now, 18%, at a record earlier in the day when they were up more than 27%. And for the month of June, which is, of course has just 2 days left, they have more than doubled. And in fact, they're headed for their biggest monthly gain ever. And this is a company whose share price history goes back to 2006.
Yeah, it's a $2.1 billion market cap company, everyone. It's based in New York City, and it is up 440% this year, Dave.
Yeah,
it's been
serious
on a tear.
business.
Well, listen, these biopharmaceutical companies, especially when they're working on a specific ailment, right? When they have some discoveries.
Yeah, especially something like Parkinson's, where other drug makers have been challenged to find treatments.
We can find Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Dave, thank you so much. He said thank you. All right, let's get to world. He did a quiet, silent thank you. Let's get to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the first Caribbean cruise has sailed from a Florida port after 15 months, with the industry ramping up again after developing, with government supervision, plans to keep customers healthy. Bloomberg's Irv Chapman has more from Washington.
Though the governor of Florida would not allow cruise lines to demand proof of vaccination from customers, that turned out not a problem, Royal Caribbean Chief Executive Richard Fain said in a Bloomberg interview, speaking from aboard ship.
99% of everybody on board has been vaccinated. If and when a case happens, because of the vaccine, because of the contact tracing, we can contain it, locate all the close contacts, test them all, and it doesn't affect anybody else's cruise.
Florida law does allow companies to demand vaccination of employees, and Royal Caribbean vaccinated 22,000 of them, Fain said. Staffing his ships has not been a problem. In Washington, Irv Chapman, Bloomberg Radio.
U.S. Secretary of State Antony Blinken is defending American action over the weekend in which U.S. airstrikes targeted Iran-backed militias near the border between Iraq and Syria. Blinken says the attacks were in response to drone attacks on U.S. forces in Iraq.
This action in self-defense to do what's necessary to
prevent further attacks, I think sends a very important and strong message. And I hope very much that it is received by those who are intended to receive it.
Blinken says the attacks focused on 2 weapons storage facilities, one in Syria, the other in Iraq. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Joining me once again is Charlie Pellet of Bloomberg News, and you can hear him doing the Bloomberg Business News flashes. Charlie, checking out Tesla. It's up about 2.6% today. And the company's aspirations in China, story by our Katrina Nicholas. Its aspirations in China dealt a major blow over the weekend after the government ordered that almost all the cars that it has sold in China, more than 285,000 of them, be fixed to address a safety issue.
Indeed. You mentioned how Tesla shares are doing today, Carol Massar. Worth pointing out, though, that in the year-to-date column, lower for the year, down by 2.4% compared to NASDAQ and the S&P 500 index. Obviously, the more important index there, the S&P this year, up by 14.1%. But the State Administration for Market Regulation saying in a statement over the weekend, this is in China, that the action involves 211,000 locally produced Model 3 vehicles, 35,000 imported ones. The California-based car maker only began deliveries of its Model Y SUV in January, so the recall going to pretty much affect every driver who bought one in China.
Yeah, the headlines and the news narrative out of China has been a little bit more, it feels like, difficult for Tesla as of late. It's an important market. We have reported in the magazine about when they built their factory in China, how they were able to do it really quickly, and Elon Musk was very smart in terms of working with the government and able to get things done. It's an important market to Tesla as well. The Chinese market tapping into that domestic consumer and the demand for EVs specifically in China. We know it's though increasingly a competitive one because China has a lot of its own domestic producers, and the government watching very carefully in terms of how Tesla's been handling maybe some of the concerns around its autopilot.
And indeed, going to be very interesting to see how quickly this all gets resolved, because in most cases, according to our reporting, the fix should be able to be made remotely with an online update to the car's active cruise control feature.
Yeah, exactly. Anyway, Tesla shares, as we mentioned, off their high for the day, but still nonetheless up about 2.5%, and they've rallied about 22% since their March low.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks on track for a record, at least for the S&P, NASDAQ, and NASDAQ 100 index. But first, Facebook shares are moving higher. Facebook has won the dismissal of 2 antitrust cases filed by the federal government and a coalition of states when a judge threw out the lawsuits. Shares of the social media platform now pushing higher. Facebook is up by 4.1%. Technology companies are outperforming, with news on Facebook winning dismissal of those lawsuits, pushing the broader equity market higher. Treasuries climb while the dollar fluctuated. S&P, as I mentioned, on track for a record, up by 6, a gain of 0.1%. NASDAQ up 127, up 0.9. NASDAQ 100 index up by 1.2%. Again, could see records for NASDAQ and the NASDAQ 100 index. Right now, the Dow is down 172, drop of 0.5%, 10-year yield 1.47%. Gold down 0.1%, 17.79 the ounce. West Texas Intermediate crude down 1.6%, 72.86 a barrel. Bank stocks will be in focus right around 4:30 p.m. Wall Street time. Banks are poised to announce a deluge of dividend increases and stock buybacks after last week's Federal Reserve stress tests. Among some of the bank names, J.P. Morgan Chase up now by 0.1%, Citigroup down 0.1%, Bank of America lower now by 0.3, Wells Fargo down 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session. We have definitely seen a leg up when it comes to the S&P 500 and the NASDAQ just off their highs of the session. It really is, though, generally speaking, a risk-off trade today, except if you happen to be in the tech space, if you happen to be a chip stock. And we know that we also saw some of those big tech names, specifically Facebook, pushing past its $1 trillion market cap. So let's get to it, and let's talk about the drive to the close. Joining us once again is one of our favorite guests here, and we're talking about Tom Plum. He is President and Chief Investment Officer at Plum Funds, based in Madison, Wisconsin. Joining us on the phone from there, I talk about this all the time. His balanced fund, consistently a top performer. It has beat pretty much all of its peers in the past 5 years, returning on average annually 15%. Forgive me, Tom, I have a ton of notes around me, and I couldn't find where I wanted to go. Nice to have you back with us. How are you?
Oh, Carol, it's great to talk to you.
It's that kind of a Monday. I'm just going to put it out there. So this marketplace, what have you been doing? Have you been buying? Have you been selling? How do you see it? Are there opportunities?
Well, Carol, like we've talked in the past, the market initially had the cyclical rebound economy, and those were the stocks that really were performing first part of this year as they rebounded from some real significant problems caused by the pandemic. But now we're starting to see a little bit of a moderation of the growth rates that we'll see, and we're starting to discern between value companies and value traps, because I think that there's a lot of areas of the economy that are still going to be stressed. They're still going to have some difficulty growing. And there's going to be some companies that are going to do pretty well because they've weathered through this. And they've, as we've talked in the past, we prefer growth stocks. But the fact that some of these financials, for example, now that they're going to be able to deleverage, that loan quality has not deteriorated, and we see more loan demand pick up, they could actually start to become, true values and see some growth in their stock prices even from these levels.
So one name you like is JP Morgan. We did have a headline today that they are buying a stake in a digital bank, C6, in a move into the retail space there, the retail banking sector there specifically, so expanding their reach. I'm guessing you're going to be watching for some of the headlines after the close today to see what they do with that extra cash post the Fed stress tests. What is, though, you're thinking about JP Morgan?
Well, basically, they're the best company out there in the major banks that we've seen, and they have excess capital. And when we go back to the times that the bank stocks were the leaders, that was back in the 80s and early 90s, and even the early parts of this century, when they were deleveraging, when they had high-quality growth, and they didn't have to continually borrow more money at expensive rates. So the return of capital through dividends and through stock buybacks is going to be something that's going to fuel true growth. It's one of those things that, like a Warren Buffett has always liked about certain companies like Coca-Cola, for example. It makes sense at this stage, and those type of companies that have been well capitalized, weather through this, I think they can be growth stocks again.
That's interesting. So, okay, so you're thinking about that, about JP Morgan. Another financial that you like is Discover Financial. Ticker is DFS, and it's actually had a pretty nice bounce this year. It's up about 31%. You're also talking about a dividend, 5-year net growth of about 9.5%. Is it the dividend story again that you like, or what?
Well, it's the convergence of the reopening story with the structural move to digital wallet. So Discover was significantly impacted because a lot of their purchases are through restaurants and retail. Their point of sale, where you're in contact with the person on the other end who's you're buying your product from, you're at the restaurants. So the reopening of the economy is going to help them significantly. And then the fact that they have a real high capital ratio, and then we'll be able to start to return some of that. They also have a network that we think is valuable and can be used as all these companies are trying to build up their digital wallets.
It's a lot of financials that you like. I'm just looking through your list. MasterCard is another one. And that's, again, what? As the economy reopens, whether it's services, whether it's goods, people are going to be using their cards more.
And especially they're going to use them at restaurants, they're going to use them for business, travel, and entertainment, and they're going to use them for cross-border transactions. Those three areas were very weak for MasterCard last year, even though they showed revenue modestly increasing because of the online purchasing and things and the digital wallet that we've talked about. But we expect then to see a real cyclical rebound, and they're probably going to have earnings, maybe even revenues up 30% the quarter that we're in. And we're looking for the whole year for the earnings to be up almost 30%.
So here's a little bit of a different company, Olo. And this is a company that had its IPO earlier this year. Tell us about the thinking on this one.
Well, it's online ordering. So that's what it stands for. And it's the interface between the restaurants and the on-demand world. They've got, they're basically Switzerland for those companies, those restaurants that don't want to develop their own apps and their own interfaces. This is a company that then can put you together with DoorDash and Caviar, that can get it you combined with your ordering system at the restaurant with Clover and Toast and processing your transactions. So it's wedding the person who wants to buy something. You want to go to a fast food or any type of restaurant and order your food. We've all gone there now. You see the line. You can skip the line if you've pre-ordered. That's what this company does. And basically, that's the world we're in now. People are not going to sit in line to go to a Subway or something like that when they can use this app and get in, out, do whatever they want to do.
Yeah, it definitely plays into what we've seen over the past year in the changing world. Hey, Tom, just got about 30 seconds left here. One name that, or not even a name, but you are the crypto world. We're all obsessed. And you say, don't confuse crypto technology with cryptocurrency. Just quickly explain that.
Well, cryptocurrency is basically, I think, somewhat of an artificially created shortage story. And, if you go back, you don't have to live the tulip bubble, but you can go back to 25 years ago to the Beanie Babies. And you can see that when you have artificially restrained supply, and then you have a story, it becomes a fad, it feeds on itself, but it doesn't have any real sustainable value.
Yeah.
It's difficult to think that you would actually use a Bitcoin to buy something at Starbucks that you're going to drink and it disappears an hour later.
Well, it's certainly something we talk about a lot. Tom, always good to check in with you. Tom Plum, he's President and Chief Investment Officer at Plum Funds from Madison, Wisconsin. Coming up next is Beyond the Bell. We're going to take you through the closing bell here on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day on this Monday. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell. Here to help take us beyond the bell. Our global simulcast team, joined right now by Carol Master, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. And Carol, it looks like it's going to be a record day, at least for a couple of the indices.
Yeah, and listen, it was a good thing to be certainly the NASDAQ. In particular, we saw tech stocks really, Caroline, the outperformer today. In large account, it was a risk-off trade if you look at the S&P 500, but not if you were Facebook, $1 trillion market cap there. And if you were a semiconductor stock, you saw semis also hit a record as well in today's session.
Yeah, in terms of breadth, the amount of companies that are higher on the S&P 500, only 203. The amount that are down, 300. But you cannot fight the power of Facebook, Microsoft, Apple, Nvidia, Amazon, Tesla, all on the green, Romaine.
Yeah, absolutely. And look, I mean, we talk about what would be sort of the next leg of the market. Remember, a lot of folks had sort of abandoned some of these big cap tech stocks. They're now finding that maybe that is where the growth is. That is where the safety is, Taylor.
And how about this? A Fed balance sheet that's now above $8 trillion for the first time ever. This was a great note that I read. This is 10 times the level on Lehman Day, 93% higher than 2019. That is so much of our conversation, Carol, that's been dominating today about when a Fed is in this market, and indeed, it goes higher.
And listen, I'm thinking so much of our conversation is going to be about the big banks. We're going to watch for some headlines after the closing bell. This is the first day that they can start to talk about what they're going to do with all that extra cash, that is specifically buybacks, dividends, after Romaine, those Fed stress tests.
All right, we're getting the closing bells here in New York. S&P 500 up about 0.2%. Tech's about 10 points, 4290 and change right now. The NASDAQ composite up about 1%. The NASDAQ 100 up about 1.2%. Meanwhile, the Russell 2000, that is lower on the day, down about 0.5%. Just real quickly, we should also point out the Dow Jones Industrial Average down about 0.4%, and Dow Transport's down 1% here. So, Carol, based on that, you can kind of see where the mindset of investors are, at least for today.
Yeah, absolutely. And I do wonder, Romaine, when the mindset's going to start thinking about that jobs report on Friday. Always key, right, to see what's going on in the labor market. It also gives us some indication of maybe what's next for the Fed. I know I'm kind of rushing the week a little bit, guys, but I am already thinking about how that might play out this week.
You know, Carol, it's interesting what we saw on the majors level. We're also seeing on a sector level. I want to do something different today and start with some of the losers, because that really ties in this rotation out of value back into growth. Then you saw that today, right? With durables, transportation, energy. For our radio audience, for the sectors, those are off anywhere from 1 to 3.5%. You climb higher and you see that rotation back into growth with technology, media, autos, semiconductors. You're up anywhere from 1 to 3%. Media and entertainment, Carol, as you know, it is Facebook really leading the charge on days like today.
Oh my gosh, $1 trillion market cap. Every time I see it, it just kind of blows me away. Hey, let's talk about Etsy, folks. Up 7.4% in today's session. The company buying Brazil-based Alo-Sech, so they're expanding into the Latin American market, I should say. BI saying, our Bloomberg Intelligence guy saying it expands the reach into that e-commerce commerce space, which is about $29 billion in Latin America specifically. Energy names caught my attention as well. NRG Energy up more than 6%. Goldman adding it to its conviction list. They are watching cash flow specifically at that company. They're upbeat about the future numbers in that space. Body, Caroline, I think you talked to the co-founder of Body, a SPAC, right? It was like 3 companies coming together, creating this mega wellness fitness company. Body
taking on Peloton, right, Carol, taking on Peloton. A little bit of nutrition in there too.
Exactly, like they get this whole idea of pulling it all together. Stock was up more than 6%. And speaking of Peloton, Caroline, I wanted to look at it. They have been on such a run, and you know, this is an interesting day. There's a legal deadline for filing in the class action suits that are out there regarding material disclosure over treadmills and accidents. But nonetheless, Peloton continuing to move up another 4.5% in today's session, guys.
All right, well, on a day where the S&P 500 hits a record high, more than about 300 of the stocks actually are down on the day. Carnival Corp moving lower here. The company having, of course, adding to the raising capital, I should say. I'm having trouble spitting it out, but also concerns here about that Delta variant and how it might weigh on travel here. Not only is Carnival down, most of the cruise lines, most of the travel booking companies like Booking and TripAdvisor also lower here on the day. Biogen taking a leg down here. Remember, 3 weeks ago, they had that great news, the FDA approving that Alzheimer's treatment. Now Congress looking at that $56,000 price tag and saying, that might be a little bit too much, so keep an eye on that space. GM lower here after JP Morgan analyst said sales in the month of June might not necessarily be as high as they were in April and in May. And then finally, keep an eye on the financials. You talked about this just a second ago, Carol. Capital One and a lot of the other banks are going to report basically what they might actually be giving back to investors. We should be getting that at some point here after the bell.
And notable that the banks had a tough day today, Romain, because of, well, maybe what U.S. yields were doing. But I'm going to go cross-asset for our radio audience. This is a beautiful picture of what happened in terms of your FX, your commodity space, and your bonds. And what was notable is today really was a risk-off kind of rally. Even though we're at record highs, you did see money moving into the havens that is tech. And we saw that sort of reflected in currencies. We saw the dollar a little bit higher, dragged lower by U.S. yields falling. But overall, Canadian dollar was off by 0.4%. The Kiwi, the New Zealand dollar, off by 0.5% against the US dollar that tracked higher. But that's also related to what happened in commodities, because the CAD, of course, the Kiwi, all related to what happened in terms of oil currently off by 2%, $74. It's still at an elevated level, but we are seeing oil pull back ahead of the OPEC Plus meeting later today, heating oil down. This is a story also of hot temperatures in the US, in Canada. That's, of course, impacting some of your soft commodities, the higher prices that we're seeing in agricultural-related commodities. Also, what's going higher? We're seeing yields down across the board in the UK, in Finland, in Belgium. This just spoke, I think, Taylor, to that risk aversion, that worry of the COVID Delta variant.
You indeed certainly see that here in the US. You're off 2 basis points on the front end of yields lower, price higher, and that extends on the long out curve. You're down 5 basis points to a 148. And a 209 as we continue to talk about this round trip movement that we've had since the Federal Reserve almost about 2 weeks ago. And Carol, we could fold this nicely into the big news of the day with yields lower. It's been a rotation from value back into growth, and certainly Facebook leading off the day today with some of that big news about that antitrust announcement, at least the case, let me say that again, the lawsuit dismissed, but the case not quite dismissed as yet. The judge says that they can refile within 30 days, but a big day for the stock and that valuation nonetheless.
It's always complicated with those. I think it's interesting just listening to the conversation about this day where we saw a lot of names actually lower in the trade. Reflation trade was off. We were back into those big growth names, yet trying to make sense of kind of where we go from here to see the S&P, the NASDAQ 100 all set fresh records. It was kind of interesting to see that. And then you had, the cruise industry. We're watching kind of what's going on. They're slowly making their way back. But Romain, you mentioned Carnival specifically doing another capital raise. I found that intriguing because they have raised billions of dollars, and we're kind of at the finish line of kind of getting your ships back out there. So it's interesting.
Yeah, $500 million in stock. I was trying to spit that out earlier. Of course, earlier we heard from the Royal Caribbean Cruises CEO. We actually asked him about what he was going to do with some of the money that his company had raised. Take a listen to what he had to say.
We really feel that it's important to get the flywheel going. We're constraining, we're choosing to constrain capacity so that we can learn, because we have to learn. And our objective is to bring our ships back fairly quickly. I would expect the majority of our fleet to be back operating before the end of the year.
And that is Richard Fain, the chairman and CEO of Royal Caribbean, of course, noted cat lover. We spoke with him earlier here on our show here. And, you know, he offered some great perspective here. He's actually on a ship right now. I believe, what's it called? The something edge?
The Celebrity.
The Celebrity Edge, right?
What
Sounds
you are,
very glamorous. It's very glamorous. We're all celebrities here on this program. But, you know, he's out there, and this is obviously the first ship to leave from a U.S. port. So a big deal. It's only, I believe, at 40% capacity with regards to the actual customers on board, but still significant.
Significant that's helmed, of course, by a woman as well, the first captain, U.S. captain, female captain.
Captain Kate McHugh.
Does seem to have a rather ugly cat. Yeah, that was she's a social media fixation, we understand. But overall, I mean, this is a story of a reopening trade, Taylor, which...
Does Carol know about our cat mascot, Mocha
These
Bear?
are fighting words. Okay. If you ever caught a cat ugly.
Caroline, do not take on Taylor on her cat.
Carol, we can bring it back to fundamentals if you like. There is a long story about the captain's cat that travels with her on those ships, but it really does bring back that theme of growth had been the big laggard to value, but it is slowly catching up.
She has the cat to keep the mice off the ship. You know that.
Is that what
That's
it
a
is?
good idea.
Oh, there you go. I never thought about that.
Maybe keeping her company. We do have to talk about financials, right? Increasingly getting back to work, but we know, guys, it's not a straight path. Everybody's doing their own thing.
Synchrony, yeah. That was a really interesting take. That sort of the tech. Of course, it's going to be the tech, the fintech that goes for like a 5-day not able to do. You're going to be flexible working at Synchrony. And they're also going to be looking at, well, no one can work full 5 days in the office, but they're going to be able to try and keep it transparent as to who gets FaceTime, who doesn't. But UBS very much wanting to go for a hybrid model as well, Romain.
So we're talking about hybrid work. Do we get that here? How does that work?
I think not. Sadly, I can't get this sort of beautiful camera equipment in my home. I don't know about your luxurious pad, Romain, but I'm not sure I have got quite the space for this.
Getting okay, this chart I like for our radio audience is 45% in some month, they took down the chart, and 60-something% in the next month, in June. There we go, 62%. New York offices to get more crowded. That's the headline out there right now, and I concur with this. New York is way too crowded.
It's back.
It's way too crowded.
Are you going to Boston soon and leaving the crowded New York?
Yeah, I don't think Boston's going to be any less crowded, but yes, I'm glad you did that, Taylor, because this is a great time for me to mention that all of our viewers, all of our listeners should catch Bloomberg's annual broadcast of the Boston Pops July 4th Spectacular, hosted by Alex Steele and yours truly, the humble Romain Bostic. That's going to air at 8 p.m. Eastern Time on July 4th. John Baptiste, the Boston Symphony Orchestra, Mavis Staples, I mean, just a whole host of celebrities are going to be there. A whole host of them are going to be there. And you should check it out as well.
Well, nobody celebrates July 4th like the Boston Pop, so it's a great celebration, and it's good for Bloomberg and all of you guys to be involved in it. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll be back tomorrow at the same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. As we mentioned, the equity markets, we did see a couple of records, certainly when it came to the S&P 500, the NASDAQ Composite, and the NASDAQ 100, all setting fresh records in what was largely a risk-off trade, where we are awaiting some headlines from some of the major banks when it comes to how they will use that extra cash post those passings of those Fed stress tests. We got that all last week. In the meantime, we got to get an update on world and national news. For that, it's over to Nancy Lyons in our D.C. studio. Hey, Nance.
Hey, Carol. President Biden is hoping to get the bipartisan infrastructure deal on track by highlighting its expected economic benefits. He's stressing it would include the largest investment in transportation in nearly a century, and millions of jobs would be created. White House Press Secretary Jen Psaki says the president will be traveling tomorrow and spreading the word.
The president will travel to Wisconsin tomorrow to keep actively making the case for this agreement and getting it over the finish line. And he's also going to continue to make the case for his American Families Plan, which we're also fighting to pass through the Tooth Path approach.
Psaki says the president is eager to sign both pieces of legislation. The average price of regular grade gas nationwide climbed 2 cents over the past 2 weeks to clock in at $3.15 a gallon. But analysts warn another price hike could be just days away as wholesale prices increase and some states prepare to roll out higher fuel taxes on Thursday. Patrick DeHaan is with GasBuddy.com.
Part of the increase in demand has not been met by an increase in supply yet. And that's because the depths of the COVID crisis last year caused oil companies to shed thousands of workers, reducing oil output. So most certainly, oil production is not anywhere near its pre-COVID level.
DeHaan says the average price for gas this 4th of July is nearly $1 more per gallon than last Independence Day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, and joining me once again is Charlie Pellet. And Charlie, you are someone, those of our listeners and watchers on YouTube know that you are someone who travels a lot, enjoys traveling, and you love going on cruise ships.
I love going on cruise ships, and it isn't happening anytime soon. Closest I'm going to be getting to a cruise will be invited aboard the SS Master to sail up and down the Hudson River, which I would take, mind you, but I like being on a cruise ship. I like the shows. I like the buffets.
There's no Lido deck on the SS Master, I'm just telling you.
But we got that midnight buffet, and I can't wait for that. But here's what's going on. Cruise stocks today, they got crushed today. It was a down day. We saw all of them moving lower today. Carnival Corp, for instance, plunging 7%. Royal Caribbean down 6.5%. Norwegian Cruise Line Holdings down 6.1%. A lot of things going on today that sent those stocks lower.
Well, and there's a couple big things. First of all, you had Disney. They actually delayed a sailing, a trial sailing that they were trying to do. Carnival, and this I find interesting, selling as much as $500 million in stock according to a filing today. Proceeds earmarked for the repurchase of its Carnival shares and for general corporate purposes, but the shares did see some pressure. This is a company that has done a big capital raise.
Yeah, exactly. And the Disney story is kind of interesting too there, but they were scheduled to sail tomorrow out of Port Canaveral. That's where a lot of the Disney ships leave from. The Disney Dream is the vessel. What's interesting though, that cruise has been scuttled for tomorrow. 300 employees on board who had volunteered. Not sure I'd like to be on a cruise ship with just 300 people, but that to me is the fun, the people.
All right. You are listening to Bloomberg Business Week. I'm Carol Massar along with Charlie Pellet, and this is Bloomberg Radio. Let's do a quick check on the markets here right now. Just a reminder of how we closed here. Dow Jones Industrial Average down 150 points, down 0.4%. S&P 500 up about 10 points for a gain of 0.25%. The NASDAQ tech stocks in particular, really the outperformer today. The NASDAQ up 140 points, up almost 1 full percentage point. You did see the S&P and the NASDAQ in particular pretty much just finishing off their highs of the session. And when it comes to records, S&P 500, the NASDAQ Composite, and the NASDAQ 100 all setting fresh records in today's session. All right, now, I want to bring you to a story that caught my attention reading in this morning, and I got to say, most of her columns do catch my attention. Bloomberg Opinion columnist Tara LaChapelle, she covers the business of entertainment and telecommunications and deals. She writes about how the streaming giant Netflix is a Wall Street banker's dream. She's here in our Interactive Brokers studio to tell us a little bit more about it. Good to have you here with us. Tell us, because Netflix isn't actually doing the deals, right? It's everybody else.
Right. So Netflix has managed to become M&A's banker's dream by never being a client of theirs, right? Like they're not doing any deals themselves, but because all of these media giants feel pressure to merge with one another in the name of beating Netflix, they are thus enriching that industry. And it's really funny because you would think that these companies would want to kind of emulate Netflix, and Netflix has built its success without doing any big M&A at all. And it doesn't seem like they're even headed that direction. So it's interesting to see the industry scrambling to do these giant deals that are very expensive. And Netflix might still win the streaming wars without having done a single one.
And your point is Netflix, in terms of developing content, it's in-house.
Right. I mean, they keep striking deals instead of with other companies in the industry. They're striking deals with famous producers, actors, legendary directors, such as Steven Spielberg, who last week they signed a deal with his production company to make some movies for the service. So I think they've been really smart about building this organically and focusing on the content and making the app really good, as opposed to feeling like they need to control everything in the space, which I think is the strategy companies like Comcast and AT&T have kind of tried to employ.
Because you do wonder about, you do a deal, And maybe you get some really good parts, but you also get a lot of other stuff that maybe costs you a lot of money, or you have to take a lot of debt to do that deal.
Right, and it's not even clear that it's worth it. You know, look at AT&T. They spent $102 billion, including debt, to acquire Time Warner, and now they're selling that business. They're selling it to Discovery because they realized there's really not a good way to make a lot of money in streaming unless you are the leader like Netflix, and it's becoming a really difficult race for these companies. So I think you're going to see more companies dropping out, and the ones that don't are just going to get bigger and bigger through M&A.
So what about Comcast? I mean, I think about, and you're right, they are king of debt.
Right, so Comcast already has a ton of debt from when they bought
Cable
Sky.
companies often do, though, right?
Yeah, and a lot of it did come from M&A, though. They bought Sky in the UK a couple years ago when they lost out on the Fox deal to Disney. So that's where a lot of that came from. But Comcast, Brian Roberts, the leader of Comcast, is now reportedly considering deals for either Viacom CBS or Roku, something that would help them become more of a streaming powerhouse, which again is just fascinating that Netflix is forcing all these companies to do this.
Tara, what do investors, you know, who do they reward? Do they reward the play that Netflix is doing, or do they say, because you know often somebody does a deal, sometimes investors like it because they think, okay, finally you're doing something. Others are like, you're spending way too much to
Yeah,
do
it's
this.
such a good question, because if you look at Comcast, every time they try to do a big deal or there's a report that they're thinking about it, their stock goes down. I think investors don't want to see them do something like this because they have this really strong internet business. It's very profitable. Why go big into debt and have to do a deal that's going to be very, very risky?
I love this line in your column. All this M&A in the past 3 years adds up to more than Netflix's worth in market capitalization, and yet it hasn't broken Netflix's hold on 200 million plus subscribers of the many investors that favor its stock.
Right? I mean, everyone's doing this to beat Netflix, and nothing is changing the fact that Netflix is the far and away leader.
What about Disney in terms of what they are doing? Because I feel like they have ramped up. I don't feel like it. The numbers are showing they've ramped up pretty quickly.
Yeah, I mean, they're growing very quickly. I think they're probably the biggest threat to Netflix. I think that they have more to do, though, to get a broader audience. I think their offering is a little bit confusing because they have Hulu still as a separate product. And so any sort of adult content, if you will, is on Hulu. You have to pay for it separately. I think they need to clear that up a little bit. But Disney definitely has what it takes to be like Netflix and be a leader because they have so much great content. So again, just like Netflix, it's all about the content. It's not about being the biggest company in the industry necessarily and owning all the different components. It's about making things that people want to pay for and watch.
I also do wonder sometimes the executive suite and somebody like a Reed Hastings who doesn't seem to really care what everybody else is doing. He has his own methodology and his own way of doing it versus some other leaders in the C-suite or CEOs who are used to doing deals or doing it a different way, you know, or doing it the usual way.
And feeling like they need to, that they need to keep forging these ties. And Reed Hastings and Ted Sarandos, they're just going their own way. But I think, you know, it's working, obviously. And it's a little bit of the mentality that Elon Musk has with Tesla that, you know, they welcome the competition. Well, you know, they welcome the competition because it draws attention to why streaming or why electric vehicles are the future. If everyone's getting into it, it sort of justifies your own incredibly rich valuation. So I think for now, they're welcoming the spotlight on this space, but it is getting more competitive for Netflix for sure.
What do you watch when you're watching the streaming space in terms of who might be gaining on somebody? Because Netflix is the one everybody's trying to, you know, achieve and be like.
Yeah, you know, I think last year's pandemic-driven subscriber numbers are very misleading. I think the real test is going to be just like for the box office.
Right, because they were distorted because we were all stuck
We
at
were
home.
all watching it. You know, we had a lot of free trials, too. We were willing to pay for anything. So I think, you know, the next 6 months to a year will be really interesting. What I look at is the content that's coming out. That is what is going to drive subscriptions. The reason Netflix is as popular as it is because it has so much on it. It's very simple. There's no ads still. I think those things are indicators of where the subscribers are going to shake out. I think you look at something like HBO Max, Discovery Plus, Paramount Plus, they're not quite there because nobody is talking about what's on these apps.
Right.
You need to be the talk of the town, so you need things that people want to watch.
I feel like Disney's really good at that.
Yes,
And talk to us about the Marvel series. And I have to say, I was late to the game. I have a brother who's like, wait, you haven't watched the Marvel movies? And my daughter, who had watched them all, and she's like, I'm watching them with you, Mom. I've loved them. And then there's all these offshoots of them. So How is that helping Disney Plus?
I mean, the Marvel deal and the Star Wars deal have just been the gifts that keep on giving for Disney. Bob Iger was incredibly smart doing those deals for pretty cheap prices. I think they were about $4 billion each. And, what they're doing
with true content. He wasn't getting a lot of excess stuff, right?
Exactly. It was all about the content and about making the content better. What they're doing now is they're making 10 Marvel series for Disney Plus and 10 Star Wars series. So there's the question of, are they going to maybe do too much to the point that they kind of ruin those brands a little bit? But so far, I think it's working. I think there's a lot of interest. And, it kind of shows that there's been this shift away from box office feature films towards streaming series that keep people coming back for more.
It's interesting in terms of Marvel offshoots, because you're right, because all of a sudden it can be, you're jumping the shark pretty much, basically, when it comes to content. It has been remarkable to see how the Marvel series just keeps able to grow and grow and grow. They know when to stop kind of a certain series, but they have something else to jump into.
Yeah, I mean, there's just so much there. There's so many storylines to build off of. I think they need to be careful with Star Wars. I think Bob Iger realized that maybe they were going a little too quickly with that and rushing those, and they actually held off on one of those movies, pushed it back a year or so. So I think they just need to be careful about it. But so far, it seems like it's working, and I think that's shows that what Netflix is missing is a big franchise.
Netflix is.
Yeah, they don't have a Marvel. They don't have something like that. So how do they build something like that that makes people really excited about the app?
When it comes to creators, people who are creating, whether it's a Spielberg or somebody else, the creators of content, do they have a preference? Is it money? Is it freedom to create what you want and oversight? What is it? Because I do always think about, are there preferences of where people want to go to create their content?
It depends who you talk to. There are a lot of creators in Hollywood who have embraced Netflix in large part because Netflix pays. And I think there are still a lot of directors who are a little bit reticent to go that route because they value the sort of cultural institution of movie theaters so much. But you're starting to see that change a little. And I think as you see the theatrical window break, where you're not having to keep movies exclusively in theaters for such a long period of time, for say 90 days, as that gets shorter, I think you'll see Netflix more willing to put movies side by side in theaters and on the app. And maybe that opens up Netflix as being more attractive to more directors that do still value theaters.
I want to ask you also, Discovery Plus. How is that going?
So I think
I'm bombarded with ads.
Yes,
because I watch, the.
I'm a big fan of what Discovery does. I think that they are extremely smart. I think David Zaslav is one of the shrewdest CEOs in this space. I think they're focusing on something that no one else is focusing on, which, for lack of a better word, is trash TV.
Yeah.
And I think that's an endearing term.
I call it veg TV.
Yeah,
Please,
I
come
think
on,
they
Tara.
should. Yeah, I think they should wear that badge with pride. I think that a lot of America craves that. It's what's missing from a lot of these streaming apps. I don't know about it being a standalone service at $5 a month. I think, maybe that's not worth it to people.
Do we have numbers yet or not? They haven't done they haven't done it yet, right?
Yeah, they haven't reported all that yet. But I think that what you're going to see is as they become a little bit more successful, they probably tie up with another company. Right now, it seems to be Warner Media, and maybe HBO Max and Discovery Plus somehow become one service. I think that would make more sense.
How is the rising popularity, and you write about this, of Disney Plus, HBO Max, and Discovery? You say they're still making Netflix work harder. Are they making them better, or will it cause Netflix to make a mistake, maybe?
I think they're making Netflix better. The weaknesses of Netflix, everyone has the same complaint. Their movies just aren't that good. You're scrolling endlessly through things. And they don't have a lot of reality TV shows. And we've seen that change just in the past year. They've introduced a bunch of reality TV competition shows. They're pretty good. They're pretty entertaining. I think that's smart. And I think the Spielberg deal shows that they're at least thinking about film quality and making that better. So they know what their weaknesses are, and they seem to be targeting that. And again, they're doing it without spending billions of dollars on acquiring a rival.
See, this is why you read her column. This is why I always read her column. Everything you want to know with streaming. Good stuff.
Thank you.
Really great stuff, actually. Tara LaChapelle, she's entertainment, telecommunications, and deals columnist at Bloomberg Opinion in our interactive broker studio. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we are glued to our Bloomberg terminal. Regions Financial says the board to consider a dividend increase. MoneyGram strengthening its balance sheet, reduces debt by $100 million. And Dime Community Bank also announcing a pre-tax gain of about, I guess they're coming out with some earnings. Anyway, we are really looking for the big banks to talk about what they're going to do with all that excess cash that they have following those stress tests. You recall those last week, the bank in good shape according to the Fed, and now they can think about doing buybacks and dividends. We're going to break it down in just a moment. First, though, let's get back to your top business stories, a look at news after the close, Charlie Pellet.
Indeed, and absolutely right about those bank stocks. You got to keep it locked into Bloomberg. Developing story, we're getting these headlines. Morgan Stanley announcing a 100% boost of its quarterly dividend. And again, you mentioned Regions Financial says the board will consider a dividend increase. Developing news, this is as it happens right here on Bloomberg Radio. Stay with us, and we will have the very latest as it becomes available. This headline crossing the Bloomberg Professional Service, Cathie Wood's ARK investment filing to create a Bitcoin ETF. So big news after the bell. Cathie Wood's ARK investment has filed or is filing to create a Bitcoin ETF. Facebook today winning the dismissal of 2 antitrust cases filed by the federal government and a coalition of states when a judge threw out the lawsuits. Shares of the social media platform did advance today. Facebook up 4.2%, surging to a record. It was a record-setting day for the S&P 500 index, up 9, a gain of 0.2%. NASDAQ also at a record, up 140 points today, surging by 1%. And one more record for the NASDAQ 100 index, up by 1.3%. So records today for the S&P, NASDAQ, and NASDAQ 100 index. It was, however, a down day for the Dow Jones Industrial Average, the Dow falling 150 points, down 0.4%. Well, as for the market backdrop, Tom Plum is President and Chief Investment Officer of Plum Funds. He was our guest right here earlier today on Bloomberg Business Week.
We're starting to discern between value companies and value traps because I think that there's a lot of areas of the economy that are still going to be stressed. They're still going to have some difficulty growing. And there's going to be some companies that are going to do pretty well because they've weathered through this.
And the 10-year yield, 1.47%. Gold down 0.1%, 17.79 the ounce. Bitcoin up 5.9% today. West Texas in crude down 1.7%. Again, Morgan Stanley announcing a 100% increase of its quarterly dividend. I'm Charlie Pellet. That is the Bloomberg Business Flash.
That's right. The biggest U.S. banks certainly in focus, expected to announce their plans for distributing capital. And we're just getting some of the headlines crossing the Bloomberg terminal. Charlie mentioned Morgan Stanley doubling its quarterly dividend to 70 cents a share and to buy back up to $12 billion worth of its shares. And that stock we're seeing certainly move in the after hours. Let me just bring up the stock here. It looks like it's up about 3% here, so no surprise. And we're going to look for some more headlines. Let's get into it, though, in terms of what we might hear, and we'll continue to break them down as they cross. Our own Sally Bakewell is here with us, finance team leader, at Bloomberg News. She's in our interactive broker studio. So they're coming out, Sally, slowly. We have Morgan Stanley, and again, doubling their quarterly dividend to 70 cents, buyback up to $12 billion. Those feel like big numbers.
Yes, they do. And we weren't really sure what to expect, but we did have some understanding that early estimates indicated that the 6 biggest banks could return more than $140 billion via dividends and share buybacks, which could be the largest ever. So we knew the numbers were going to be big after they sailed through stress tests last week.
Here's another one. JP Morgan also to boost their quarterly dividend to $1 a share. We're seeing that stock up about 0.4%. So we're seeing an increase as well. State Street to boost its quarterly stock dividend to 57 cents a share. And I'm just trying to bring up all of these share prices just to see where the movement is, because Morgan Stanley definitely shot up. JP Morgan is just moving a little bit. Is there some disappointment, perhaps?
I'm not sure. I mean, I think perhaps some of it was baked in, potentially. because the investors were somewhat perhaps expecting this.
And JP Morgan, their dividend was 90 cents, so they're just boosting it by 10 cents a share, so not a huge boost there.
Right, exactly. I mean, we are expecting Capital One to do very well, apparently because it has lower subprime cards than a year ago, and Regions Financial too. We're expecting to do pretty well. We weren't expecting too many surprises really, and we've already had the kind of naysayer voices in opposition to all of this activity, such as Elizabeth Warren, who says that buybacks are kind of a form of market manipulation. So really it's just sort of waiting to see what banks decide, what options they decide to pursue.
All right, so let's just rehash. JP Morgan boosting its quarterly dividend to $1 a share. They also are going to continue their buyback. That's been in place. We said that stock was up a little bit in the after hours. State Street's up about 0.5%, and State Street to continue its share repurchases in upcoming quarters. They're boosting their quarterly dividend to 57 cents a share. And just looking to see if there's another one. I said State Street's just up about 0.5%. And Morgan Stanley, as we said, that seemed to be one that was definitely getting a lot of attention in the after hours. It's still up about 3%. And that big bank doubling its quarterly dividend to 70 cents and buying up to $12 billion of shares. So it sounds like, I can't tell whether that's a new buyback, but nonetheless, it's a lot, and that quarterly dividend is a big one. I mean, how do the big banks kind of assess this? I mean, giving it back to investors certainly does something to juice the share price, maybe makes investors look at it a little bit differently. But I guess everybody has to look internally about what their needs are, right, in terms of their cash.
Yeah, they do. And we might be able to kind of glean something from what their decisions are of what they want to do with their money for the rest of the year, because they are now sitting on mountains of cash. It's also interesting that these stress tests created a huge amount of anxiety after the financial crisis, but now banks they're kind of able to sit back and relax is probably a stretch, but they can navigate these a little bit more smoothly now because they're used to handling the stress tests. So it's an interesting kind of change in the industry.
Well, and Sally, the stress tests go on, right? They're not something that goes away, but the conditions change, obviously, right?
Yeah, exactly. And the scenario I think they dealt with this time round was a nearly 11% unemployment rate and the stock market tanking by more than half. Right. So that was the kind of hypothetical pain that they had to make sure that they could weather.
And they're still required, just got a few left here, they're still required to hold a certain amount of cash, right? They've still got to be careful.
Exactly.
Cautious, right?
Yeah.
It's not like it's all in terms of putting all of the money that they've had in reserves to work.
Right. They have to kind of maintain that constant capital buffer should situations unfold that would require them to make sure they can make that asset match.
Well, I know you and your team are going to be busy assessing, and especially as we get more of these. Only a handful have trickled out, but I know, as you mentioned, Capital One and some others that you guys are going to be watching for. Thank you so much, and thanks for doing it with us in live time. We really appreciate it. Sally Bakewell, she's finance team leader at Bloomberg News in our Interactive Brokers studio. Let's go back to World and National News and to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Senate GOP leader Mitch McConnell is demanding that President Biden pressure Democratic congressional leaders to keep separate the bipartisan $579 billion infrastructure plan and a larger bill that would carry out the rest of Biden's social agenda.
None of the Republicans during the negotiations and the Democrats that were in that group talked about it being linked to anything else.
McConnell is hoping to head off an effort by House and Senate Democrats to use a fast-track budget process called reconciliation to pass a Democrat-only bill with trillions of dollars in spending and tax hikes on the wealthy. The Supreme Court is upholding a ruling that said transgender students can use the bathroom that matches their gender identity, and this happens in schools. The High Court refused to hear an appeal of a lower court ruling that said treating transgender students differently violates Title IX, a federal law that bans sex discrimination in schools. The ruling is a victory for Gavin Grimm, who was born female but identifies as male. He'd had had years of legal battles with the school board in Gloucester County, Virginia.
This victory is important and wonderful and will not go underappreciated by me, at least.
Grimm says it is frustrating, though it took so long to affirm transgender rights. Global News 24 hours a day on air and on Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio, along with Charlie Pellet. It's kind of just a wacky kind of day, and we're continuing to process those big bank headlines, Charlie, where they are now able to take that money that was put aside as required by the Fed to shore up their reserves. And we know the Fed stress test released a bunch, and so we're watching some of the headlines, but we're waiting for some more to come out. Some stocks moving, especially Morgan Stanley rallying in the after hours. In the meantime, talk about a rally. Facebook was up 30% so far in 2021. The stock getting another boost in today's session, a gain of about 4.2%. It is now a $1 trillion market cap company, Charlie.
Yeah, indeed. We don't get to use the word trillion too often.
Although increasingly so, yes.
Exactly. Whenever we're talking about big companies, but that antitrust victory, as you mentioned, pushing its market cap above $1 trillion, it makes the social media giant the fastest company to reach the milestone. But rather than talking about big round numbers, I think we should back up and just talk about the significance of this Facebook story, because Facebook has escaped, at least for now, the most significant regulatory threat to its business to come out of the wider crackdown on U.S. tech giants. Going to be very interesting to see how, if at all, this plays out in Europe. After all, they've got a number of big tech companies that have been or are under investigation there. But clearly, today's decision, Carol, delivering a blow to the FTC and the states, which claim that Facebook violated antitrust laws.
And here's the headline on the story. Facebook winning the dismissal of 2 antitrust cases filed by the federal government and a coalition of states when a judge threw out the lawsuits. And so, as Charlie mentioned, the stock taking off today. Facebook reacting and commenting on that in an emailed statement, saying it is, quote, pleased with the rulings in the antitrust case. I'm sure they are. And as you said, Charlie, it isn't necessarily over when it comes to European regulators, who can be a little bit tougher on some of these, but it was a blow to the FTC and many of the states in the U.S. which had been going after Facebook and saying that they violated antitrust laws. Charlie Pellet, thank you as always.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Bank stocks front and center after the bell. We knew these headlines were coming. Here are the details. Just getting word that Bank of America is boosting its quarterly dividend by 17%. JP Morgan Chase boosting quarterly dividend to $1 a share, will continue its buyback. And Morgan Stanley doubling its quarterly dividend to 70 cents, going to buy back up to $12 billion of its stock. This is a result of passing last week's stress tests. Kathy Wood's ARK Investment filing to create a Bitcoin ETF. That word coming after the close of trading. Turned out to be a record day on Wall Street for the S&P, NASDAQ, and NASDAQ 100 index. Down day for the Russell 2000. Right to the numbers. We'll give you the why in a moment here. S&P up 9, a gain of 0.2%. Dow Jones Industrial Average down 150 points, down 0.4%. S&P up 9, a gain of 0.2%. NASDAQ 100 index up 1.25%. To be clear, record for the NASDAQ 100 index, record for NASDAQ, record for the S&P. Some of the world's biggest tech companies led stocks to records today, extending a rally that's already added $6 trillion in value to the equity market this year. 10-year yield 1.47%. Gold down 0.1%, $17.78 the ounce. West Texas Intermediate crude down 1.7%, $72.80 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, really appreciate it. Thank you so much, Charlie. Well, check out the definition of trust. You'll find firm belief in the reliability, truth, ability, or strength of someone or something. And when it comes to consumers, trust has become key when it comes to how they look at brands. Let's get into this. Someone who keeps an eye on trust via the company's Trust Barometer is the founder and CEO of the global communications firm Edelman, Richard Edelman. He is back with us once again on the phone in New York City. How are you?
Hello, Carol. Happy summer.
Feels good, right?
A little schwitzy, but hey, all good.
Yeah, it is a little humid. That's for sure. Talk to us about your latest findings about brand trust and the importance of being able to trust a brand versus just being in love with a brand.
So I think that the impact of the pandemic over the last year has been long-lasting, and the people's values have changed from being about me to being more about we, and things like, meeting societal needs as opposed to, just representing my lifestyle. And people are now doing what I call belief-driven buying, or they're exercising brand democracy. In a certain way, that's the relationship that you can best control immediately. You go to the store, you order what you want. And Carol, the most incredible thing is that it's always been that brands can change culture. You and I grew up in a time of, Mean Joe Green and Coca-Cola and all that. That was changing culture. But people actually now believe that they can change brands. That, in fact, 2/3 of people say they can force a brand to change almost anything about itself. That's stunning.
But they can, right? Especially if they're voting with their dollars in terms of where they choose to spend money.
I think that's right. That people have intuited that in this moment, the brands they're going to buy are the brands that are going to stand up and speak up for the better, and that they're going to speak up. 86% of people told us one way or another, I want my brands to speak up about societal issues. And that's a huge change. So, if you think about Dove and Campaign for Real Beauty, that started more than 10 years ago, and they were talking about how women should be comfortable with their body shapes and all this other. But now Dove has morphed itself into talking about the necessity of looking at African men differently, African American men, that they are every bit, not just athletes, but also artists and politicians and all the rest of this. And they did that for Father's Day. And that's the kind of difference in brand marketing.
It's interesting. I recently did a panel for the Milk and Health program, talking with the CEO of Kellogg, the president of Chobani, the CEO of Albertsons, and also a president of Unilever, one of their global divisions. And it's interesting, we talked about really the evolving food system, but one of the things is how consumers are driving change within the food system and how they are increasingly, they want local, they want transparency, and that is forcing a lot of companies within the food space to produce either locally and make sure that they are being, true about what's in their product or where it's made, where it's produced, because consumers, they want to know, and that's how they're buying.
But Carol, it just in what you're saying, brand and corporate reputation have completely merged. And things that were in the remit of the corporation, like supply chain, sustainability, diversity and inclusion, systemic racism, are now being seen as within the power of the brand to change. And, half the people in our study said, look, if the corporation is evil, I'm not going to buy the brand. But by the same token, you have to have brands leading on sustainable packaging or on changing their sourcing such that the workers make a decent wage. Carol, this is amazing. The most important thing for a brand to earn trust is paying a worker a fair wage and giving that person good working conditions. And I know you had Becky Mankiewicz on last week for Manpower, and we were talking last week at lunch, about you, but also about the reality that it's not enough just to pay people. They want to have flexibility. They want to know that the company they work for is a decent company. So again, all of this is really coming together because business is now the most trusted institution, and brand is sort of the tip of the spear. It's the thing that people can control vis-a-vis the corporation.
Well, it's interesting that you bring it up. And Becky and I talked about this, and we're going to talk at another Bloomberg event tomorrow, actually. We're trying to get our hands around what does that mean? You talk about workers being paid, but workers want flexibility. We're still trying to grasp what coming back to work is like after the pandemic. Synchrony Financial, they've got 3 different scenarios. You can work at home permanently. You can kind of say you're going to come in and I need a seat, for a little bit. I think hoteling is what they call it. Or you can decide that you're going to have a hybrid approach. And so you'll have a permanent seat at work so that you have flexibility. But we're hearing a lot of different scenarios. What are you hearing about that?
Well, yeah, I think the financial services industry has taken the hardest line, saying come to the office, period. Our agency last week announced that we're 3 days in and 2 days out of office, and the hybrid is the best approach. And we're encouraging people to have vaccines, but those who don't are going to have to wear a mask. And that's a real kind of issue because it's is that a scarlet letter? And do I want to be in the elevator with the masked person? And I do think the big point is employees are now activists, and that they think that they can change company policy just the same way that consumers do. And it's a if you think about the power elite that's sitting at the top saying we have the decision-making authority, not really, because the people at the bottom are now talking on social media, and they're also acting and pushing corporations and brands.
Right. Social media has given every individual consumer a soapbox and one that can be heard pretty loudly. Richard Edelman.
But even if you have a celebrity, right? Cristiano Ronaldo pushing, the soda away last week, saying, I want water.
Yeah, exactly. Right. And that just says so much. We ran out of time. I know we'll talk with you again soon because you always bring us some really smart insight about what's going on, especially when it comes to consumers. Richard, thank you so much. Richard Edelman, CEO at Edelman, joining us on the phone in New York. Coming up, Sound On with Joe Matthew. Joe, what are you focusing on?
Well, we're kind of trying to figure out what Washington is focusing on here. We thought there was a deal for infrastructure. Somebody pulled the rug out over the weekend. Are these in tandem? Are they separate? Will there be reconciliation? We've got a lot of questions to ask and some smart people ahead on Bloomberg Sound On.
The president has been kind of backstepping some of the words he said.
Clarifying remarks, we like to call it in Washington.
Exactly. Well said, well said. Catch up on all things Washington with Sound On with Joe Matthew coming your way in just a moment. For the whole Bloomberg Business Week team, have a good and safe evening. This is Bloomberg.